Good morning, ladies and gentlemen. Good morning. The scene is beautiful from here, I can assure you. We're still expecting our chief guest, and we'll be telling you very shortly who the chief guest is. I want to recognize the chairman of the Nairobi Securities Exchange and our host exchange for this annual conference, the president of Asea, Mr. Tapelo Shole, my fellow Asea CEOs. I think it will be just in order for me to ask the CEOs of the exchanges represented here to stand up and just wave to the audience. Maybe you could stand for just a minute. Representatives, the chairman of the Rwanda Stock Exchange, Mr. Bob Karina. We have a Kenyan who is the chair of the Rwanda Stock Exchange. Members of exchanges represented here. Members of the Kenya capital markets represented here. Representative of listed companies. Today we are honored to have the CEO of EABL, Jane Karuku, and also the Chief Officer from Safaricom, Mr. Michael Mutiga. Honorable guests, members of the media, ladies and gentlemen, good morning again. I think for me this is a momentous day because Asea has come home. Asea was born here 30 years ago, and today we're celebrating 30 years of its birth. So we're in a very, very festive mood for Asea. It's also the 26th annual general meeting. So as Kenya, as Nairobi, we feel very privileged to be hosting you here and to really share with you the Kenya hospitality and the friendship that we have across the African continent. Asea has over the years grown leaps and bounds. When it started way back in 1993-94, 4 exchanges came together to really form a Pan-African institution where we could share knowledge about what's going on in capital markets, but help develop these markets. Today, as a rotational presidency, highly coveted. I can tell you, I've tried being the president of Asea and I lost the election to my good friend Ed, it was Haji then. But that's the kind of excitement and presence Asea has across the continent. And so we're very delighted that it actually has a very good rotational presidency, and our president for this year is the CEO of the Botswana Stock Exchange, Mr. Tapelo. We're here to learn, we're here to share, we're here to network, but we're also here to enjoy ourselves. So we have prepared a program that is not very heavy on content. It's got very good topics, very, very exciting topics, but also we have also a lot of side events that we believe will be able to showcase what we have to offer in our great city. Markets is a very important part of our economy in Kenya. It's got a very high level of appreciation right from the presidency, and that's why we are really hopeful that we'll be able to see or receive him. But just generally across continents, the position the capital markets are taking is really, really providing that level of importance to every economy to turn it around, to help improve and scale this up. So we've arranged so many topics on how we can achieve that, and you'll be seeing, we'd call you to really enjoy the panels, interact with them, and really help them go forward. As we do this, we have new topical issues. We have the issues around sustainability. We are delighted to say that we have our sustainability, one of Africa's leading sustainability champions, Anushka, in the room, and I'm really looking forward to hearing more from that. We have our Pan-African brothers from the AFDB, Ben and Akin. We are really keen to also interact with you. AFDB has really been a key or funder of Asea projects, and we hope to see more of that. We have exciting topics around data and how data is becoming the new exciting revenue stream for exchanges, and just a whole host of many other things that we intend to bring out during this conference. So mine is to say, Karibu Kenya, Muko Sawa Sawa. Muko Sawa? Yeah, anytime you meet a Kenyan, he says Sasa, you just say Sawa or fit. And you get your way through, eh? Don't start looking hesitating, eh? All right? So we wish you well. Wish you a good day. I hope you enjoy yourselves. And please, let's network and really bond over the next 2 days. With that, I think I have the honor and privilege to invite the chairman of the Nairobi Securities Exchange, Mr. Kiprono Kitoni, to share the official remarks. Thank you very much.
Good morning. If you don't mind, if you'd allow Jeff and I to do a consultation for 1 minute, because we have some communication about the possibility of the chief guest being en route. So if you just give me 1 minute before I make my remarks. Thank you.
Ladies and gentlemen, welcome to the 2023 Asea.
Come and feel at home, especially for our guests who have come all the way across Africa. And of course, we are also celebrating our 30 years of shared prosperity under Asea.
We do expect an incredible program today. We've got a lineup of distinguished speakers. We also have some in-depth conversations around Africa's capital markets.
Absolutely, and we're going to jump straight into it. Earlier on, we just went through the program, and because our chief guest is here, we want to have our first speaker come on stage, Terian.
All right, we'd like to welcome the CEO of the Nairobi Securities Exchange, Mr. Jeffrey Odundo. Let's give him a warm round of applause.
Your Excellency, the President of the Republic of Kenya and Chief of the Defense Forces, your Honorable Minister, CS, National Treasury and Planning, PS, National Treasury and Planning, ladies and gentlemen, members of the Asea Exco, our President, Apelo Shole, ladies and gentlemen, good morning. I'm overwhelmed to say that today our chief guest and the champion of our capital markets is with us today. Mind is to say welcome to the conference, Your Excellency. In this congregation, we have 29 exchanges represented by their CEOs. With 1 minute, I can request all the CEOs of the exchanges represented to stand in honor. Will the President recognize you? There we are. We also have members of the Kenya's capital markets present here, Your Excellency, and we're happy to say that thank you for honoring us under this, this very, very important day. I would now like to invite our chairman to give a brief about the Asea and the conference, and wish you all a good day. Thank you, Your Excellency, for coming.
Your Excellency, our chief guest, Your Excellency, the President of the Republic of Kenya, Cabinet Secretary, National Treasury, PS, National Treasury, President of Asea, distinguished guests, ladies and gentlemen. It is a singular honor and privilege for me to stand in front of you to welcome you to this conference in Nairobi, gathering 45 delegates from 29 exchanges across the continent of Africa. Before His Excellency came, I had my iPad, and I was going to read my official statement, but His Excellency has a very limited time, and we have to respect that time. Your Excellency, I think your Pan-African credentials are not in doubt. I know that you learned late last night about this event, and the fact that you have chosen to amend your program to fit us in is a great honor for us, and we are very grateful for that. Your Excellency, over the next 2 days, the delegates here will be having broad conversations about the challenges that face the capital markets and the galvanization of capital in the continent of Africa. Among the conversations, Your Excellency, will be the climate change conversation, and this is very timely, coming only 2 weeks before the COP conference, where Kenya will be leading the African statement from the private sector. Your Excellency, we will be having those conversations. How we can help governments mobilize funds, how we can help the private sector mobilize funds, and indeed, how we can alleviate poverty from our people. Our continent contains many resources that make us unique and singular in the global equation. By the year 2050, the population of our continent will be larger than that of India and China combined. The GDP of this continent, the untapped resources, and I think if we cannot find African solutions to African problems, then for sure we are headed in the wrong direction. So, Your Excellency, we are so honored that you could be here today to give us guidance insofar as how these conversations should be formed, to give us your thoughts in terms of what we should be doing. I will not say more than that, and I just said yesterday to the delegates that the conversation around where the cradle of mankind was long settled. So I say to the delegates, welcome home. And with those few remarks, it is now my honor to invite the President of Asea, Mr. Tapelo Selo, who is also the CEO of the Botswana Stock Exchange. Welcome, Mr. President.
Thank you, Chairman. Your Excellency, President Ruto, most of us see you on television talking about the African agenda. So we really appreciate. All distinguished guests here, for the sake of time, I will stand on the protocol already established, as they say in Nigeria. All former presidents of Asea, let me take this opportunity to welcome you to the Asea annual conference hosted here in Nairobi at the gesture of the chairman of Nairobi Stock Exchange and our lovely CEO, Jeff Odondo. Mr. President, it is worth noting that this conference was initially not supposed to be here. It was supposed to have been held in Egypt, but because of logistical problems, we had to request the Nairobi Stock Exchange to put it together in less than a month. It was not a hard choice for us or a hard request for us, because we know whenever we don't have a host, Nairobi is always there to welcome us. Your Excellency, distinguished guests, we are very glad to be in Nairobi, Kenya. We have been welcomed very well. Some of us here don't need any welcome. I've been here 5 times this year, so I deserve a permanent residency to be always here. I will not dwell much of the written speech, Your Excellency, but just take time to really appreciate the work that you are doing for the Kenyan capital markets. We have been informed that And I know very in Nigeria, our dear friend here, former President Oscar Wanyama, was also given a national award in Nigeria. Former President Edu was given a national honor in Togo. I'm not hinting anything, Mr. President. All what I'm saying is that on our behalf as African stock exchanges, Jeff have done a very good work, not only for Kenya, and also for all of us here. And as Jeff retires, we really want to thank him for his dedicated service. It is not easy to serve all these exchanges. Some of these economies are big, some are small, and all of us looked into Jeff to put us together, and he successfully managed to do that for the past 2 years. We wish you success, Jeff, in your office, and we know that the Kenyan people will not let those good brains go to waste. And therefore, we can rest assured that in one way or the other, you'll play a role for the Kenyan people. With that, Your Excellency President Ruto, I thank you, and we have a good day.
Much. And once again, let's appreciate the President Asea for those remarks. Your Excellency, at this particular time, I want to request our Cabinet Secretary, National Treasury and Planning, Professor Njuguna Dungo, to kindly come and give his remarks. A round of applause to the Cabinet Secretary as he comes.
Thank you very much, Your Excellency, the President and the Commander-in-Chief of the Defense Forces of the Republic of Kenya, Dr. William Ruto. I'm very happy that you managed to get some time in that busy schedule. We are very sorry that we had to ambush you this morning, but I do believe that it is for a good cause. Dear guests, distinguished guests, let me thank His Excellency for finding time to grace this occasion. It also demonstrates the government's commitment to support the capital markets and the financial sector development in general. It's also coincidental, Your Excellency, that I was going to meet the market tomorrow. We have had several dates that we programmed, but time was not there. But tomorrow we are meeting, and we want to actually to reflect in terms of where we are coming from and where we should be going. So I'm very happy about this coincidence that the issues that we raise today could be an input in terms of what we're going to do tomorrow and even the future structure of our markets. This is an important occasion for the capital markets, particularly stock exchanges across the African continent, to take stock of recent developments, including performance, opportunities, emerging issues, and even challenges that require concerted efforts to address. This year's conference theme is Unlocking Africa's stock exchange potential for sustained economic development, but it is also indeed important for frontier markets in Africa that are facing very serious challenges and how we need to tame them. The sustained prosperity of a nation is closely linked to the creation of an enduring, competitive, and even stable financial system that provide an opportunity to mobilize financial resources and deploy them in productive investment and even sectors. The role of government is to create a conducive environment to increase the opportunities for borrowers, savers, investors, and be part of the development discourse, and also make sure that they can appropriate returns from their own investment. Because as soon as investors cannot appropriate returns from their own investment, that is, they are consumed by cost structures, then they stop investing. A majority of African stock exchanges face structural hurdles to growth, and they are struggling with liquidity and also considerable minimal participation by retail investors. We have to rethink structure given the digital age. We need to think about that in terms of how we are going to contain the process. The initial public offering IPO landscape in Africa further confirms that the challenges that our stock markets face are quite immense. The pipeline of IPOs and even further offerings in Africa has decreased significantly. It is against this background that we need to deliberate on how to solve the legacy and emerging challenges facing stock markets in the continent, and even explore opportunities to reestablish the competitive edge of public capital markets as an avenue of raising capital in Africa. I'm grateful to the African Securities Exchanges Association, Asea, ladies and gentlemen, because they champion digital transformation that we are all looking forward to. And this is going to improve market condition and even accessibility and transparency. In this ever-evolving world of finance, even where we have challenges entering the international financial markets, we do believe that our markets are the lifeblood of our economic and even our own role in terms of shaping the future. And that responsibility is profound. It is important for us to rethink strategy, to rethink the innovative ways of getting there. The African capital markets are, as a collective entity, important in terms of playing a vital role to fostering economic vibrancy and promote regional integration. With these few remarks, because time is not on our side, and I can see there is a whole set of seats here for a panel discussion, which I believe is going to be rich. Let me say that I join the Asea in terms of congratulating them of the stock markets in Africa for the 30th anniversary. We do hope that Asea continues to be our vibrant driver and partner as we chart new ways to grow our capital markets and, in particular, stock exchanges in Africa that are the backbone of our thriving economy and financial market. We do believe that this is the appropriate path. It is important for us to recognize that. It's important for us to make sure that we take steps in terms of consolidating that gain and making sure that we have a vibrant market, but also a market that is going to stand the test of time. Those were a few remarks from myself, and because we had His Excellency the President is having a strain of time, I take this honor, singular honor, to invite him to lead his speech and address this market. Thank you very much.
Thank you very much, Minister. Please, let's take our seats. Thank you very much. I don't know whether Keeper had actually, the chair had an iPad, and whether everybody seems to be blaming me for time. But it's really unfortunate that I won't be able to sit here. I would have really wanted to sit here and listen to you on this very important subject. But Minister and PS will sit in for me later, and the good man, Jeff, will also, I'm sure, will give me some notes on what you guys will have agreed on. As you are well aware, I am very passionate about the one big thing that is going to unlock the huge potential that exists in this continent, and that is integration, how we can work together. And I am very happy when I was told last evening about this occasion, despite the many other issues on my diary, I said I need to make a few minutes just to encourage you that what you're doing is the right thing. Integrating our stock exchanges, cross-listing, and using technology to bring down the barriers that exist and the limitations that are built in by other issues is a very positive thing for you to do. I just thought I should encourage you that on this journey of integrating institutions in our continent, you are not alone. We are with you 100% as leaders in this continent. And therefore, Mr. President, I'm happy that you have learned a few words in Kiswahili. However, I want to warn you that soliciting for any items in Kenya is against the law. So I know Jeff very well, and you have put in a very strong case for him. And certainly your words will not go unnoticed. I have noticed what you have said, and I agree. But it gives me great pleasure to once again join the capital market stakeholders across the continent at the 2023 African Securities Exchange Association Annual Conference. Today, we celebrate 30 years of association and collaboration between the different exchanges in our continent. Kenya is proud to have been among the founders of this great body, which has enhanced the level of knowledge share, cross-border trading, and relationships on the continent. We also meet to celebrate and focus our efforts on the future of financial markets in Africa, recognizing their potential to unlock capital and accelerate economic and business growth across our continent. Stock exchanges play a significant role in mobilizing domestic resources and international capital critical for Africa's economic renaissance. If well harnessed, stock exchanges can be the engine that transforms Africa into a global economic powerhouse and the financial center of the world. And I mean it. It is a reality. Over the last few years, African stock exchanges have seen considerable growth bolstered by reforms undertaken by various countries in different ways. These reforms, such as interest rates liberalization, removal of debt ceilings, enhancement of regulatory environment, as well as restructuring and privatization of state enterprises, acted as a catalyst that saw growth in our markets over the last decade. These reforms notwithstanding, the changing macroeconomic dynamics have affected African stock exchanges, heavily weighing on their growth and impact. As we speak, Africa exchanges remain modest, and their contribution to economic development continues to be marginal. A majority of African stock exchanges face structural hurdles to growth, struggling with liquidity, considerable minimal participation by retail investors. The IPO landscape in Africa further confirms the challenges that our stock exchanges face. The pipeline for IPOs and further offerings in Africa has decreased significantly. With over 40 exchanges in the continent, we should be able to have at least 5 listings per day across the continent. And you know that's not the case. It is against this background that you meet to deliberate on how to solve legacy and emerging challenges facing stock exchanges and stock markets in the continent and explore opportunities to re-establish the competitive edge of public resource markets as an avenue for raising capital in Africa. We all understand that the global economy has changed. Markets have become very uncertain, and we therefore must work on enhancing the efficiency of the capital markets to make it much more resilient to market dynamics. On our part as government, we have taken various steps to revitalize the capital markets. 2 months ago, I did assent to the privatization bill, heralding a paradigm shift in the process of executing privatization of public enterprises by infusing international best practices and, more importantly, cutting off unnecessary bureaucracies that made the privatization process almost grind to a halt, where only one transaction was closed over the last 15 years. Just imagine that. And it was one of the big issues that I really wanted to sort out. And when I went to the stock exchange, I did promise them that the government of Kenya is going to list at the exchange more government entities. Unfortunately, the law became so convoluted that before even we could do that, we had to work on the law first. I'm very happy that we have settled the law, and now we have close to 35 companies, government companies, that some we will be selling outright, others we will be bringing to the stock exchange, and therefore I intend to keep my commitment to the stock exchange and make sure that we use the stock exchange to enable more Kenyans, more Africans, more private sector people to own part of our public entities. I am pleased to hear all the recent developments within the Africa markets facilitated by Asea, including accelerating the growth and development of Africa's capital markets through various strategic initiatives aimed at creating unified and efficient capital markets across the African continent. Asea has championed the digitization of African stock exchanges, promoting the use of technology to enhance trading, settlement, and market information dissemination. This digital transformation has significantly improved market accessibility and transparency. Asea actively supports the issuance and trading of infrastructure and green bond assets that are critical in mobilizing capital for infrastructure development projects in African countries. Asea has also developed the African Exchange Linkage Project, a trading infrastructure that aims to reconnect over 30 stockbrokers with the aim of promoting cross-border trading of securities among member exchanges, further enhancing market integration. In this ever-evolving world of finance, where our markets are the lifeblood of our economies, our role in shaping the future is profound. The Africa capital markets, as a collective entity, play a vital role in fostering economic growth, development, and regional integration. I wish to take this opportunity to reflect on some key themes that are of paramount importance in the realm of capital markets, particularly in the context of our continent. Number one is liquidity in our capital markets. Liquidity is the lifeblood of any thriving capital market, and you know that. It ensures that our investors have the confidence and flexibility to buy and sell securities with ease. It is essential for the efficient allocation of capital, which in turn drives economic growth. Liquidity not only attracts domestic investors, but also foreign investors looking for attractive investment opportunities. It is our collective responsibility, therefore, to ensure that our markets remain liquid, transparent, and efficient. The trends we see in today's capital markets indicate a growing demand for improved liquidity, driven by innovative trading platforms, more accessible market information, and the entrance of retail investors into the arena. Embracing these trends, therefore, can be a catalyst for further market development. The other item I want to talk about is cross-border listing. One of the most significant milestones in the African capital markets has been the emergence of cross-border listings. This not only increases the feasibility of our markets, but also facilitates access to a broader pool of investors. It is a testament to our growing integration and our ability to offer more diversified and appealing investment opportunities. As we build at the policy level the integration of African markets using the Africa Continental Free Trade Area, it is important that at that level, you also build the integration of our capital markets. It enhances scale. It makes it possible for us to have a bigger pool of investors, bigger pool of resources, and it expands our opportunities across countries. It also enables us to learn from best practice in different countries. It is possible to pick best practice from different countries, as I said earlier, when we are in the same ecosystem. And therefore, Asea must continuously play the role of pooling exchanges together so that we can pool resources, we can create bigger scale, and be able to even attract others globally. Cross-border listing represents a trend that speaks to the need for market integration, harmonized regulation, and interoperability between exchanges. As we move forward, it is imperative that we continue to foster collaboration across borders to make these listings more seamless and more attractive. I want to speak about the third thing, which is the benefits of capital markets to economies. Capital markets are a thriving force behind economic development. They provide business with the means to raise capital for expansion, for job creation, and even for innovation. Our entrepreneurs and innovators need the support and confidence that only a robust capital market can provide. As we look to the future, let us continue to work together to ensure that capital markets remain a catalyst for economic growth across our continent. The trends in this domain highlight the emergence of impact investing and the importance of financial inclusion. There is a growing recognition that our markets can be a force for good, not just in terms of returns, but in promoting social and economic well-being. This is an exciting shift in perspective, one that we should encourage and embrace. In other words, I'm saying what the capital markets will be doing is not just about the trading, it goes beyond trading numbers. It goes to the realm of enhancing development and social good and creating inclusivity. What a single person or a single company or a single country cannot achieve, we can achieve collectively. And that is what this brings. It brings a society coming together, creating financial inclusion, and making sure that everybody can tap into the good that exists within us. Of course, the final issue I want to have a conversation about is ESG, which is now common to all of us. We now know about environmental sustainability. We know about that we are beyond all these hard facts. We are social human beings. And to be able to move forward, people are continuously now interested in governance. How transparent are we? How accountable are we? Is what we are doing making impact? Or are these just cold numbers and statistics? Good governance is the foundation of any capital market. Strong corporate governance practices enhance investor confidence and protect the interests of all stakeholders, including the small ones. Furthermore, the growing importance of environmental, social, and governance factors cannot be overstated. These considerations are not only important for ethical reasons, but are becoming vital criteria for investment decisions. Let us continue to promote transparency, accountability, and responsible corporate citizenship across all markets. The trends in governance and ESG reflect a global shift towards more responsible investment practices. Investors both institutional and individual, are increasingly conscious of the impact of their investments and what impact it has on people and globally. This trend presents an opportunity for African capital markets to position themselves as leaders in sustainable and responsible investing. Let me finally close with one item about climate financing. I was, 2 days ago, I was addressing the EU Parliament on where fate has put us. And it is very interesting that fate has a way of equalizing fortunes. While Africa supported the industrialization of Europe, we gave them all the raw materials they needed, and we bought all the industrial products they manufactured. Now it is their turn. And I was telling them that there is something lawyers call quid pro quo. I don't know exactly what it means, but I know it means something to the extent that we should even out issues, right? So we now have an opportunity, and I want to persuade you, good people, that as leadership in this continent, and when I say leadership, I mean leadership at every level. It's now our turn to position ourselves appropriately. We must get away from the victim corner. We must now position ourselves to the opportunities that exist in the new economic setup. Today, we have assets as a continent, very important assets. We have 60% of the world's renewable energy resources. We have 40% of the world's critical mineral resources. We have 65% of the world's uncultivated arable land. We have the world's largest workforce. And more importantly, we have the world's largest natural resources. We cannot, therefore, position ourselves as a disparate continent with the kind of potential that we have. What we need to do is to position these assets appropriately and work with the rest of the world to even out issues. It is no longer possible to drive the world using fossil fuel resources. Renewable energy is the bullet this time around. And by God's grace, we have the largest resources in that area. And therefore, I was asking Europe, the same way we gave you our raw materials and bought your finished products, it is your turn to provide the capital, which we together developed, because our resources, our raw materials helped develop capital in Europe. And because of the opportunity Europe had to develop all this, they also developed technology using our raw materials, and we supported them by buying their products. So it is now time for them to bring the technology, which we together developed, and the capital, which we together developed, so that we can unlock the potential that exists in our continent and provide them with green products and provide them with an opportunity for us to create opportunities for employment in our own countries so that we avoid negative migration, people going as refugees and all manner of things. It is not something as Africans we are proud of. We're very proud people. We want to work at home. We want opportunities. All these young people in rickety boats going to Europe is because they are looking for opportunity. We can create those opportunities here at home, and that is what we want to do. And a stock exchange becomes a very important instrument of making sure that resources can be agile. We can make it much more easy for resources to flow from one place to another. In the face of a rapidly changing climate, it is our duty to channel resources towards sustainable and climate-resilient investment. Many people are wondering why we are pushing this agenda of climate change. It is because therein lies the opportunity for Africa. Thank God that fossil fuels brought a problem to the world so that we can look at the opportunities that exist in our continent. If there was no trouble with climate change, nobody would want to think about renewable energy. But now that we are all in trouble and nobody is safe, the North is not safe, the South is not safe, East is not anywhere away from this trouble, neither is the West. So we are all in one place. You know, this climate change has levelized all of us. There is no more developing versus developed. We are all facing climate change the same way. And so we have to find a solution together. And that is why we have said we are not going to continue the finger pointing. We don't want to blame game. We don't want North versus South. We must do this together as humanity. The capital markets can be a force of good in this regard by developing innovative financial products that support climate finance. We can contribute a greener, a more sustainable future using our stock exchanges. The time for action, good people, is now. And I urge all market participants to play their part in fostering climate-conscious investments. I want to repeat this. It is very important that you know the opportunity that exists in climate financing. There is a very big opportunity. You must leverage on it to grow our stock exchanges. The trend of climate financing is not just a moral imperative, but also an economic opportunity. As the world shifts towards more sustainable practices, investors and businesses will increasingly seek green investment opportunities. African capital markets have the potential to play a significant role in channeling funds into projects that combat climate change and promote environmental sustainability. If you didn't hear anything of my statement, please, just this paragraph is enough for you. You know, just see the opportunity therein. As we have this conversation globally, and that is why even we have the COP28, as we have this global conversation, know that the opportunity exists and you are at the intersection of that opportunity. As government, finally, we will do our part. In the context of all these trends, it is vital for governments to actively support the growth and development of capital markets. And as I told you in Kenya, I have promised the capital markets here that we will reorganize the law. The law gave us problems. We have now sorted out the law. We have identified the first 35 companies that we are going to offer to the private sector. We have close to another 100 that we are working with our financial advisors on what to do and what portions to let out. For example, we have very otherwise would be lucrative companies, but they are trapped in government bureaucracy when the services they are offering can actually be better offered by the private sector. So we will make these opportunities available, and I want to tell our Kenyan private sector, the public, that opportunity is coming for them to be part of the cake that we have all baked as Kenyans by being part owners of some of our good companies or buying some of the companies that would better be run by the private sector and allow government to do what we must do. It is very instructive for me because I know very well that if we can unlock the potential in many of the companies, especially those that are trapped in government bureaucracy, allow them to flourish as private sector companies, they will employ more people, they will generate more resources, and they will pay more taxes. Yeah. I know that's a very important subject in Kenya nowadays. Governments can play, as I said, a crucial role by implementing favorable policies, regulatory frameworks, and infrastructure to facilitate the expansion and integration of our markets. Initiatives such as tax incentives, simplified regulation processes, and fostering financial literacy can significantly contribute to market growth. I would want to know from the Kenyan markets players what additionally they want us to do as government so that we can make it easier for them, agile, flexible, for them to do more in our capital markets. Furthermore, partnerships between governments and market participants, including exchanges and regulators, can lead to more effective market development. Supportive regulatory frameworks, investor protection, and innovative financing mechanisms are also essential for the sustainability of our capital markets. As we discussed today, vital themes and unlocking Africa's stock exchange potential for sustainable economic development, I encourage all stakeholders in our capital markets to collaborate, innovate, and adhere to the highest standards of ethics and responsibility. Our future, ladies and gentlemen, and the prosperity of our great continent depends on the health and vitality of our markets. Today, I have recognized 10 companies joining the unquoted security market segments of NSE, Nairobi Stock Exchange, also, or Nairobi Security Exchange, as I was told, also known as Soko Rahisi. This is a key development for the country, noting that the growth of our economies will be funded by these segments of our economy, with the MSME sector comprising 80% of our formal economy. My government will continue to support this key sector. I want to encourage companies to tap into the capital markets to power the growth of their companies and also our economy. In conclusion, let me express my utmost confidence in the future of African capital markets. With our collective determination and the dedication of all those present here today, we can build markets that are transparent, efficient, and impactful, capable of driving economic growth and fostering sustainable development. I wish you all a successful and productive conference, and I look forward to witnessing the positive change and progress that will undoubtedly emerge from the exchanges and discussions that will take place here. Thank you very much, and may our capital markets continue to be the engines of growth and prosperity for Africa. Unfortunately, I won't be here to take part in the round tables here and the other exchanges, but I look forward to another opportunity to engage with you. My very best wishes. Welcome to Kenya. Enjoy your time here, and please give us some positive results. Asanteni sana. Thank you.
Your Excellency, sir, as you make your way down stage. Your Excellency, sir, we would like to invite you to witness a live trading. This way, sir. We'd love to invite you to witness a live cross-border trade between Dyer and Blair and BVRM. BVRM is an integrated stock exchange common to 8 West African countries. And Lina Tonui, who is the Africa Project Linkages Manager, will take you through it. You may please have your seats. The trade will be broadcasted on the screens in front of you.
Thank you very much, Your Excellency. You did speak about the African Exchanges Linkage Project, and we are glad to inform you that we have interconnected 7 exchanges to a trading... Hello? Oh, okay, sorry. Thank you very much. Your Excellency, as you mentioned, the African Exchanges Linkage Project, which is a key initiative of the African Securities Exchanges Association and the Africa Development Bank, we are pleased to walk you through a live trade. So this is the terminal. It's called the AELP Link. And on this terminal, the brokers who are participating in the project, we currently have 35 broker members from 7 exchanges that are interconnected, but we have a total of exchanges that are participating in the project. So brokers from the different markets are able to see all the exchanges. They can, choose a different market and then place a trade. So today, Your Excellency, we are working with Diane Blair in Nairobi, who will receive a trade and place a trade from the BRV market, and we are very honored to have all the members here. But then BRVM will be joining us online if we're not able to broadcast them at this point, but then they have already placed a trade. So Peter will show us the trade that has come in from them. So the broker from whichever market places a trade, and now it has come into the Kenyan market. So Peter will accept the trade. Peter, you may go ahead. It has been staged.
Okay, Your Excellency, this is the AELP platform. We have received an order to buy 2,000 Safaricom shares from FGI in Cote d'Ivoire. So the order has come in. It appears as staged. So all we need to do from our end is accept the trade. So I'll just go ahead to accept the trade. It says, do you want to approve the order to buy 2,000 Safaricom shares for that client? Then we'll say yes. So the order has been accepted. So once we refresh, it shows that the status is now accepted. So the order has come to our market. So all I'll need to do from my end is push the order from DFN, from the AELP platform, to our market live in Nairobi, which is already open. So I'll proceed to create the order. It's 2,000 shares, placing at a price of 13.70 for Safaricom. Then we'll proceed to buy. Once we click on buy, the order goes through. So I'll just click buy and confirm the order. As you can see, the status has now changed from accepted to filled. So now the client from BRVM has 2,000 shares of Safaricom.
Your Excellency, thank you. We request you to ring the bell at this stage, and I want to request the President of Asea, the Chairman of the Capital Markets, the Chairman of the NSE, and Geoffrey as well, our NSE CEO, and the Cabinet Secretary as well. Please join the President in ringing the bell as we have this session of marking the 30 years of Asea as you ring that bell. Your Excellency, because, as you said, you confirmed this at the last minute, I'm going to just do a count, and that will, then you will ring it in. In 3, 2, 1, please, ladies and gentlemen, please put your hands together. This marks the 30 years of Asea. We're going to have a quick photo session right there. I will start with that photo the way it is, just a quick photo there. The photographers are very set. And then the Asea leadership is going to do that photo. And finally, our key sponsors who are in the house. So if you could kindly come quickly, that one is done. So the Asea leadership led by the President of Asea, please, if you could kindly join into the photo. Thank you so much, the Asea leadership. There you go, please allow him in. Please join into the photo. And finally, we want to request the sponsors, each one representative. Safaricom, Infotech, Stanbic, please come right away. One representative. Accra, Chelasoft, Direct In, and Egyptian Stock Exchange, please make to the stage now. That's the next one. Please, as they're coming in. I think for the sake of the photo to look in a nice way, for the sake of the photos, I would request the rest of the members to kindly come by. AFDB and Diageo, please. You're also requested to take this final photo. Thank you. These, Your Excellency, are the sponsors who have made this possible and have ensured that this works. I can see the Safaricom representatives in the house. Well done. Thank you so much, please. Excellent. Thank you so much. There you go. Your Excellency, just before you leave, we have a gift for you, courtesy of the Capital Markets and the Asea. Yes, so I want to request the President, Tapelo, to kindly hand the gift with the Chairman to His Excellency, and then we will close that session. So if we could have that kindly on stage, because this is going to be taken by the photographers and all that. Oh, there you go. There you go. Let's have that photo very fast. Thank you so much. Thank you so much, Your Excellency. Asante Sana. Let's appreciate His Excellency as he leaves. Asante Sana for that session. Let's go back. All right, ladies and gentlemen, we want to request that we have that quick, short health break of about 5 minutes or so to allow our guests as well to come back and all. So if you need that, you could grab that moment, but don't go too far. Thank you so much.
for 30 minutes discussion, and then I'll invite questions, and then we sum up. I think the topic is quite clear. Capital raising through public markets, how stock exchanges can regain a competitive edge. And I'm happy that I have experts who are not members of the stock exchange, so they'll be speaking honestly about what are the thoughts in terms of what we can do as stock exchanges to gain a competitive edge. Because, you know, the stock exchanges offers platform in a more particular way to enable capital raising. But with the world changing, we've seen the landscape and the ecosystem fast changing, and we are having other competing platforms as stock exchanges. There's also a need to actually blend the financing needs of the private sector or even governments in order to be innovative enough to fulfill their capital raising needs. And therefore, I think it's quite fitting that this becomes the first panel discussion, because it is the traditional role that stock exchanges existed over the years. I'm looking at notes in my phone here. I had prepared proper notes, but when the presidential entourage came, they swept everything on our desks. So everything disappeared. But it's good that I have all the questions that I have. I'm going to give each one of us in the panel 30 seconds or 20 seconds to introduce himself and tell us their position, and then we'll kickstart the discussion in terms of me posing various questions to exchanges. To the panelists. I'll start from my immediate right.
I'm not sure. Good afternoon, everybody. And thank you, Mr. President, for moderating the session. My name is Patrick Kariuki, me and my capacity as chairman of the Fund Managers Association of Kenya.
Hi, my name is Gregory Waweru, Chief Executive of SBG Securities. But to the moderator, I am a member of the exchange, but I promise we'll be very honest. Thank you.
Thank you very much, Mr. President. I am Asea, the President of Association of Pension Trustees, and also Group CEO of CPF Financial Services, a pension system in this country.
Okay, good afternoon. On stage for the second time. And Mr. Chairman, I must say, we need gender balance. It's all men this time around. But my name is Michael Mutiga. I am the Chief Business Development and Strategy Officer at Safaricom.
Good morning, I think it's morning. My name is Fred Moremi. I'm a Managing Director for Centum Capital Partners, here to represent the Group CEO of Centum, that's James Moria. I'm a poor replacement, I'm sorry. Centum is a publicly listed company, has been listed on the Nairobi Stock Exchange since 1967, and cross-listed on the Uganda Securities Exchange, I think since 2011. Thank you.
Thank you, gentlemen. Very correct. I asked the Chief that, you know, when you allocate spot, we're going to be looking at gender. And I don't worry, I think in the next coming panel, you're going to see a lot of female leaders coming up. I'll start with Patrick from the Pan-African Fund Managers Association. I think you in about 15 seconds, tell us exactly what the Fund Managers Association does, and also just proceed in terms of, according to you, what do you think, what should capital raisers know when raising capital?
Okay, thank you very much, and thank you for bringing in the Pan-African Fund Managers Association. This is a recent association which was formed this year, 3 months ago, with the support of FSD, so that fund managers can interact with other fund managers across Africa, learn from each other, and also be able to come and attend such functions in our capacity as an African body. And so far, we've got 8 founder countries who are basically from Nigeria. We've got Uganda, we've got Morocco, we've got Botswana, South Africa, Zambia, and West African Fund Managers Association, and Kenya. You also asked me, what should people looking for capital from fund managers, and I'll go deeper, even from pension scheme fund managers, because that is my day job at Gen Africa Asset Managers, where I'm the managing director. One, I would like to tell you that pension schemes are slow in decision making by nature. So don't come in a rush to raise capital. Do advanced sensitization. Come around for book building in advance, and don't bypass the fund manager and go to the trustees. You will be referred back to us, and that at times leaves a bad taste in our mouths on that. And then also be upfront on certain disclosures. We have seen in the past somebody saying this is a guaranteed bond. But when you go and read the small print, it is only partially guaranteed. And even to get paid up can even take 3 or even 4 years. And also just understand pension schemes. Yes, they are long-term investors, but they have to survive the short term to get to the long term because of their yearly reporting to members. Thank you, President.
Thank you, Patrick. I think some of the aspects that you mentioned touch around regulations, disclosures. When people want to come to the market, obviously, you want them to provide clarity. But as exchanges, we are increasingly experiencing competition. That is why all of us here, even the president this morning was talking about no IPOs. People are not coming to the market to raise that capital. And I'll go to Gregory and then to Hosea in terms of what do you think is the impact of regulation in making exchanges uncompetitive? Do you think regulation is too much? Do you think we should relax regulation? At what point do you think we need to strike the balance in order for us not to become irrelevant or to be outcompeted by other platforms?
Thank you, Mr. President. I think we have to strike the right balance to ensure that we are exchanges are competitive. I think you're aware there is a lot of competition from the private markets, and as a consequence, we need the right frameworks that support and the right incentive models to support new issuances that are market-friendly, that are proactive. In essence, every marginal dollar of investment these days, there's a lot of competition for every marginal dollar of investment. And even as arrangers work towards bringing out the best equity stories, the best credit stories to come to market, we fundamentally require more flexibility. And I think in the Kenyan context, we've seen the support of our local Kenya capital markets and the exchange in facilitating new issuances, and particularly those that are of a non-vanilla nature, and that has also led to further deepening of and allowed arrangers to come up with better, more structured products that also meet some of the evolving needs of institutional investors.
Hosea?
Mr. President, you want me to tackle the same question? Thank you. I think I am representing the owners of capital in this meeting because in Kenya, I am the president of the Association for Pension Trustees and Administrators of Kenya. And globally, within our country, we represent quite a sizable amount of investable assets, but not all those assets are invested in this market, in this particular, in the capital markets. And the reason is actually varied. One of the challenges we face is that I think something which has also been mentioned by our chief guest this morning. The design of our stock exchanges are designed to fit the investor who is international. Okay? We have to rethink, and I suggest that Asea considers having maybe 3 kind of markets running side by side. One, yes, which is internationally, benchmarked to receive capital from the Western world and back and forth and other international, very professional investors. A middle market, which is basically for emerging African businesses, which are yet to get comfortable with the stringent regulations of the market. And then the third one is the African market, which is a market for the SMEs. Here is where I would say we need to have literally no regulations. Actually, normally, I think I suggested in one of the meetings we had with the capital market players that you create a crush, like a cattle crush, which receives all the animals and then channels them into one, and then they get in, and finally they cannot reverse back. So in other words, we bring into the market, and I think the Nairobi Securities Exchange, where I've also served as a director for some time, as a market called IPUCA, to really bring this kind of people. So I'm suggesting that we have actually been doing things to benchmark with international stock markets. I think it's time we did an African structured stock market to fit us, and then one which is dealing with the low end of the market. Thank you.
Thank you, Asea. I'll come back to the issue of the SME markets in order to increase the capital raising in the market by this particular sector. But maybe I go to Michael, and maybe because you are from Safaricom, right? And maybe we speak to the question of product innovation, either IT-wise or just some product that can enable stock markets to make companies to raise capital. In your own view, do you think there is enough innovation by exchanges to actually aid capital raising by various institutions across the ecosystem of capital markets?
No, thank you, moderator. So from our perspective, and I also have the advantage of dealing a lot more intimately in the market as a range of issuances previously. And there's definitely been an evolution in terms of how the market has evolved. It was long settlement days, paper-driven, etc., to now a more digital-driven platform. But it's still not there yet. I think we do have opportunities to look at 24-hour trading being a lot more convenient as to how you transact on your phone, etc. We are working with the Nairobi Securities Exchange, as it is, around launching in the next couple of coming weeks a product where you can actually trade on your phone at your convenience, and it's geared towards that segment of society that wants to participate, that doesn't have the time to actually engage the stockbroker, wants information as to how stocks are performing, make quick decisions on that trade, and have certainty that the transaction will execute. We've demoed it actually today. It's called Mali. And it's that sort of innovation, I think, that will really help catalyze those pockets of liquidity in these markets that have not been fully tapped or fully engaged. Or for that matter, needs to diversify away from, in Kenya, you buy land if you have a bit of money. And the returns on land are not great at the moment. So the reality is that helping people diversify with comfort and security has to be a priority for the exchanges. I think there's still other innovation needs to happen. Innovations around how we get information out to the public around stocks, not just the share price or today's movements, but also in terms of informing them. They might have the same sophistication of analyzing P&Ls and balance sheets, but at least information that can help them make reasonably well-informed decisions, especially for the smaller stock traders. Thanks.
Thank you, Fred. I just want to get your views in the two questions now. So first, in terms of the impact of tougher regulations that are done by exchanges to people who want to raise capital, and hence making stock exchanges much more uncompetitive to other platforms, and also the questions surrounding the innovation. Do you really think, I mean, where we are many years later, stock market are still having much more innovative tools to enable capital raising?
Thank you, Tapelo. Thanks for the two questions. So if I begin with looking at where the needs for capital. If I look at Kenya's economy, I'm sure very many of the African countries have similar economies. About 35-40% of our economy is agriculture. When I look at our stock markets, I don't see that similar representation of 35-40% of our stock markets are exposed to the agriculture element. If I look at a lot of what our youth do, our young entrepreneurs, many businesses, a lot of traders are paying very expensive pricing to be able to access capital quickly. We have got, I'm not trading barbs with anyone. We've got digital lending products which are priced at crazy rates. So there's need for capital. That's for sure. Now, looking at the regulation, we tie that to the first question. I've been fortunate, I've been involved in capital raising activities for a long time. Back as early as 2008, I was a transaction advisor, a cooperative bank IPO. We worked quite closely with Jeff. 2009 CRDB IPO in Tanzania. 2011, 2012 in Rwanda with my friend there, Bradley Roa in Bank of Kigali. I then decided to move to be an issuer. Through Centum has listed, I think, two corporate bonds. We've had some of our companies approach the markets. The capital raising process has been made very difficult. If I tie it with one of the concepts or points that was made here, it's been very suited to international capital. So that's a process that we are put through. Yet our people who are looking for capital are looking for very simple solutions. You've got traders who go to the market, they need X amount of capital in the morning, and by end of day they'll have paid it back. The interest rate for that day might be 10% for the day, but they're happy to pay it because they just need the capital for the day. Now, if you ask them for audited accounts, they will not supply. If you speak to a farmer who understands I've got a 3-month cycle, I need to plant, I need to weed and to harvest, and I'll be able to pay you back in 3 months. If you ask them for audited accounts, they will not be able to produce. So I think our innovation needs to be not about products that are nice and will hit the headlines of the Financial Times. Our products need to be around what are our people engaged in, what are the activities, where are the needs for capital, and how do we simplify it for them to be able to access the capital quickly. And there's quite a bit of capital on the continent. I know quite a bit of capital has fled off the continent, but there's still, I was doing some quick research, there's still about $1 trillion of institutional capital. Of that, pension industry controls, I think, about half of that on the continent. So we still have huge amounts of capital. I was very pleased to see the innovations around connecting us better. So there's still huge amounts of capital. We just need to make it easy. We need to have a reality of where people are looking for capital and make it easy to attract that capital to them. Thank you.
Yeah, thank you. Obviously, we're talking about regaining competitive edge in terms of capital. I think maybe to also start with you, Fred, and then go to Michael. Do you think projects such as Africa Exchange Linkages project are the step in the right direction in terms of increasing the competitiveness of the exchanges as a platform to raise capital?
Yeah, thanks. Thanks for the question. Yes, I think it's definitely a step in the right direction to create better linkages. A lot of our stock exchanges are, you said we can be honest, eh?
Yes.
Okay.
Yes.
So I think a lot of our stock exchanges are subscale. In terms of, if you look at the trading activities, the number of listings and the like, they're quite subscale. Of course, now there are nationalistic interests. Countries want to have their exchanges, they want to have their own depositories and the like. But really, in the age that we are in, do we really have to continue honoring borders that were drawn up for us by other people who since left the continent and they left with their capital? Is it possible that we think about how we, of all these stock exchanges, how do we make it easy? If I have just one central depository account as an example, am I able to trade across the continent? Then the challenge is not just for the exchanges, even for the market intermediaries. How much information are you putting out there as far as what I can do in Ethiopia, which is just next door, what is available in Benin, as an example? Again, just institutional capital alone, we have over $1 trillion of capital on the continent. But a lot of it is either stuck in their countries, and also it's stuck in their countries. It is also not addressing the needs of capital in those countries. So I think there's definitely room for, we still have to make a lot more strides. I think maybe the challenge for all of us is to shed off some of these nationalistic interests that may not necessarily be actually addressing the needs of our respective countries. Thanks.
Yeah. Michael?
I think just to add to what Fred has just said, there are a couple of aspects also to think through. We've been fortunate as Safaricom, we've attracted a lot of not just local capital in Kenya, but investors from Rwanda, from Tanzania, from Uganda, investors from South Africa, or the institutional investors from South Africa, etc. And of course, we've got a lot of global and international investors on our portfolio. But there are a couple of things we do need to get done. It's a great idea to have better Pan-African flows. But you've got the question of from a regulatory perspective, how easy is that cash able to transit across the countries, right? You still have, for example, exchange controls in South Africa, which would limit the ability of retail investors in South Africa participating in the Kenyan market and vice versa. You've got issues around risk like foreign exchange. So are we able to create intermediary or mitigants, whether it's hedges built into the trades or something that helps mitigate that exchange risk, so that we, if my grandfather is comfortable, he can actually look at buying a Congolese stock in Congo, for example, right? And then how do we ease the frictions that exist between the countries, between the exchanges? But until we solve those bigger picture issues as to make it easy for the hustler in Kenya, as is described, to trade in Malawi or Kenyan or Ugandan stocks, we won't be able to fully harness the capacities of these markets, because we want them to mitigate those risks, right? To diversify their portfolios, but there's just too much frictions that need to be solved out.
Yeah, obviously, stock markets operate in an ecosystem made up of various entities. I think the expectation generally is that stock exchanges are not operating in isolation. There are other market players who I think can also aid the competitive edge of stock exchanges. And I think I just want Hosea and Gregory, in terms of being in the financial services sector, what is it that as market participants you think stock exchanges should do to enable other market participants to help them to become competitive? Yeah, you can just speak maybe to...
Thank you. Yeah, there is quite a lot to be done, not by just the stock markets, but by the investors also. I mean, some of the investors rely on credit ratings done by offshore institutions which have almost little knowledge of the market where we operate. Yet, we know very well that when we are in this local market, we know of some businesses, there could be family concerns which have grown over time, and we are comfortable even to lend money or put money to those businesses privately, and we never worry about making any losses. But when it turns to be a professional investment, we have got too many forms to fill and so many, we have to tick so many before we can actually invest. That hesitancy to invest, because we assume we want to literally zero risk, is, I think, one of our biggest problems. The fear of making the investment or making the mistake. That's so I'm actually saying, even us as the investors, we need to be more flexible, rely a lot on information which has been passed on and which is available within the market, as opposed to really the kind of data which is generated by people mostly who have no clue of the business we are running. I can assure you, I mean, my neighbor here, not much would be known about them unless they traded, the business, they traded with the common man, actually made them successful, and that's why the common man did not ask, am I safe on your system, on your platform? So why are we asking the same question the other way around? So that's one. The second one, of course, I think we appreciate and embrace this innovation. The innovation whereby the current generation wants to trade instantly and see immediate results is good. And I'm happy to hear that we are now able to do T plus O. So that could be a very good thing, so that you can generally get into the market as it's almost like a game. Most of the young fellows actually play games on their phones. Yeah. So why can't they should also be investing on their phone the way they do play games? And even the payment system should be so fast. So I think all that is now available on our hands, so we should be able to do it. Of course, regulatory framework, though essential to protect the investors, particularly the unprofessional investors, sometimes can be too excessive. And I think, at least I can speak for our own market, our capital markets are really looking at waiving a lot of those regulations. So I think that's the future, is actually to open up, let the business flow, and then you create more flexible regulation around it. Thank you very much.
Thank you. Before I go to Patrick, before I go to Gregory, Patrick, do you want to add something?
Yes, I would just like to add there, and first just look a little back
want you to rush through those questions.
In answering them. Then answering them. So the issue number one is in terms of increase in retail participation. It's not necessarily the role of exchanges, but it's just generally the ecosystem that need to do that. There is generally low retail participation, people with money. That's why they probably end up going to gambling. Not in Botswana, but in Kenya. That's why they end up going to gambling. Number one, what do you think needs to be done in order to attract that capital to the market, to enable capital raising? That is the first point. And then the second point is the general economic structure of majority of African countries is dominated by SMEs. But there's a tendency by exchanges to go for the big boys like Safaricom in order to list. Do you think we are leaving out the SME market in order to increase activity in the market? I'll start with Fred, 2 minutes or a minute, and then I'll drill down to here. We only have about 7 minutes left. I've been warned.
Wow. Okay. I'll try to be quick. Thank you. I think your two questions are sort of two sides of the same coin.
Okay, sorry, Mr. Asea, you can. I understand you need to leave, so we can excuse you. We'll catch up later so that I get your views.
Yeah. Something?
Yes.
Before as I leave, thank you very much. It's a good question to ask, Mr. President. But are we really prepared for the answer we want to get?
Yes.
Are we?
Yes.
The reality is that, and I'm actually I've been studying this thing. The retail players, or the retail, investors, particularly at that low level of the market, are not going to bring their money and go for returns which are not interesting to them. I will tell you, for example, that I lent money to my relatives who are doing mama mboga business and the other things every day. And they'll tell me, give me 2,000 shillings in the morning, and in the evening they give me back my 2,000 shillings. And they say they have made a profit of 500 shillings. What percentage is that? Huh? In a single day. How will you attract somebody to stop doing that and give him the returns which we are giving here? So we need to bring the mama mboga, we call the mama mboga the vegetables sellers here in Kenya, the mitumba and the other traders to the market. So we need to capitalize them in the manner they know best. So actually I'm looking forward to see, and maybe Safaricom you can try this, create a platform where they just take the money and support the investors, the retail investors, invest in those retail markets on a daily basis, and they have their returns the next day. I am just leaving that as a big question for us, all of us. We are creating a market for ourselves, not for those people. So they will remain out there, and they are the majority. So think about it. Thank you very much as I leave.
Thank you. But before you leave, Mr. Asea, I'll probably have to find relatives in Kenya. Because in Botswana, I've borrowed my relatives' money. They never return it. So thank you so much. Yeah. Thank you. We'll take 1 minute per speaker because of time. Who want to start, guys?
Sure. Okay.
Fred?
Thanks. Okay. So I was just saying, and I think Jose has pretty much picked what I was going to say. Your two questions were two sides of the same coin. How do you get the retail investors to participate more in the capital markets? And so I think it's quite clear. They have the money. They are in sports betting. They can understand sports betting because they see the players. They can watch Manchester United live. and can take a view. How do we, and then locally we've got people who are looking for capital, the traders like Jose is saying. Are there some crazy enough market intermediaries who will go and say, okay, I'm going to go to the market in town, maybe Bama market, the butchers there, buy their meat by 7 a.m., by 5 p.m. they have closed. And for you guys who, instead of going to sports betting, come, there's a Bama market platform. Bring in your 10,000 shillings. By the end of the day, you'll have 15,000 shillings back, as an example. You sort out, one, the retail investors looking for investment opportunities, and it's a daily thing. And two, the capital seekers, if the exchange allows such a platform, then you don't have to come with the audited accounts as a butcher. So I think those are some of the things. Same thing for farmers. What are the people actually engaged in? Where are people looking for capital? And how do we simplify it? Because then you've got guys who've got $100, $200 who do not know what to invest in, and investing in Safaricom may be too complex. Yeah, as an example. Thanks.
Maybe just to add to Fred's comments, the flip side is this. Why would an SME come to exchange at this point in time? You've got the options of banks, and the banks in most markets are fairly liquid. You've got the options of private equity investors or even angel investors, etc. And I think it's a question of making it as easy as possible to access these markets. Same way you have to make it easy to have visibility to these SMEs and what they're doing, and creating, reduce the frictions. Because I think until SMEs are able to say, you know what, I can raise money within a month versus the exchange versus speaking to my bank manager, to be a very difficult discussion to have.
Yeah, thank you. I will now take three questions from the floor. I think Patrick and Gregory have touched on this one, two questions before. So let me get three questions from the floor before we close for the sake of time. But now His Excellency Ruto is not here. I don't know who will blame time to. We had a good excuse in the morning. Yeah.
All right, questions, please. If you have it, just show your hand.
Questions, otherwise there's no lunch.
Where is it? Oh, there's one here. There's one here.
Yeah.
Yes, please.
Thank you for a good conversation we are having here. I wanted to ask one question, since we are supposed to speak the truth. I come from the stock exchange of Rwanda Stock Exchange. I think I could confidently say I could speak for most of the exchanges on the continent on this particular issue. Liquidity. The president mentioned it so many times. We keep singing the same song all the time, and we keep seeking the other truth of capital flight, going back to the West most of the time. What are we doing with our guys in the room who have the big pockets? That is the fund managers, the pensioners, and so on, to support our local domestic markets. I wish there was also a regulator, but I see one here on my side. On the issue of supporting our markets, what do you think about minimum requirements for fund managers or pensioners, as opposed to caps on what they can invest in in terms of asset classes? Because I think that can be a big game changer. If you have some surpluses in Kenya, they can flow to Dar es Salaam. The ones of Kampala can flow to Rwanda or DRC or somewhere else, because we sit in the same, almost a similar environment, and we know each other better than those Muzungu monies can come to us. Thank you very much.
Thank you. The next question, Temi.
Oh, there you go.
Thank you very much. I just wanted to touch on the idea of a buyer beware market. I like it very much, but it's really then to think about, on the regulatory side. Let me backtrack. If you look across all our markets, what we see clearly is that there's no IPOs, there's no listings, there's no depth. And frankly, I think we have to then come to a realization that maybe we're practicing a market structure that's not necessarily fit for the continent. All our rules and regulations are copied and pasted from other jurisdictions. So, and at the same time, similar to Kenya, you look across the continent, Nigeria is no different. The betting industry is material, in its size and in its scope. The crypto industry is material in its size and its scope. There's a lot of capital flowing there. They lose money all the time, but they all sort of find a way to survive. So I think that the moment we can find a market similar to that on the capital market side, so where you say, for example, in this buyer beware market, even the regulators or the exchange can backstop a certain quantum to start. So you say $10 million buyer beware market, that's a little bit more loose and lax to some of these ideas. And if the capital went away, the exchanges sort of backstop that. My question really is back to the regulatory side of things. Is there any market that we can point at that has thought through things like this, or how will sort of the regulatory landscape for things like that work vis-a-vis how we're also very strongly regulated? Thank you.
Excellent. If you could have a final one from a lady. Got one.
Yeah, gender balance. This one is not, you just need to determine. Gender balance. Oh, Abena?
Thank you very much, Mr. President. And to the panel, our role really is to develop our national economies. Coming in on your lovely new highway, the tolled road from the airport, I want to understand how the fund management industry, the trustees sector, seek to invest in infrastructure like that. Because when I asked, I understood that it didn't include the capital market investments. So what should we do as a group to ensure that more of our money goes into the productive sectors that creates jobs and wealth for our economies? Thank you.
Thank you for the questions. Patrick, you're going to have to answer first because you are given money by pension funds to invest. So you go first on the two questions. Thanks, Temi, for that question also.
Yes, thank you for those questions, and I appreciate them. Let's look at pension fund structure. Let's first look at whose money is it. Once it leaves from the employer and the adults, also the employee portion, whose money is it? That becomes money of the members under trustees. So it would be a bit hard, and it could even be judged to be unconstitutional to sort of force them where to invest the money in down the road. But I appreciate that we should look at how can we help, and that capital follows returns. Once people see people making money, they will go there. Like I can recall here when we had the Safaricom IPO, there were long lines by retailers. Why? They knew there was money to be made. But the problem with retailers, at times, they enter without professional advice. So Safaricom listed at 5. After a while, it fell to 3 bob, 2 bob. Retailers sold, said this is a bad market. We're not going to come back into it. When it climbed up to 25, 30, 35, 40, again they entered. And then there was an adjustment of price. So what I'm saying is that capital follows returns. Maybe we shouldn't be too insistent on retailers for now. Let's see how the firms that have been listed can make good returns. The retailers will come, and also let us also educate them in the meantime on what are the benefits of the stock market. In a nice, simple language, let us ask things just like, would you like to own a bank? Yes. Why don't you own? I can't afford. But you can own a small piece of the bank with the funds you have. Yes, how? Come to the stock exchange and we'll show you how on that one. And on our highways, I'll say, yes, because of the slow decision-making of the pension schemes, I think that's what makes us lose a few of these opportunities, but all is not lost. What we did in Kenya is that a number of large pension schemes formed what is called the Kenya Pension Funds Investment Consortium. And this helps look at the deals first level. Those who want funds go to them and they come and they roadshow them to us fund managers, and they are a number that we are actively considering. I'll pass to Timmy's question about who will regulate this buyer's market, and has it been done elsewhere in the world. We can look at maybe look at NASDAQ, but I'll also ask Greg on this question. Greg?
Thanks. So I think, first of all, on the issue of retail, it's about storytelling. I think we must reframe how we communicate to them, and the decisioning aspect for retail. I think as market participants, we really have to get innovative around these challenges and telling the story to retail. I think secondly, on the issue of road infrastructure, it's interesting. I think, you've seen some videos from Stanbic playing. There's a big road project. It was taken to pension funds, but again, because of the long lead time that's involved, we didn't quite get, as arrangers, we didn't get quite the participation, and it's sometimes disheartening for me as an arranger when we go out, we end up with banks piling money, and pension funds get left behind. And a lot of times we actually structure these transactions. We take a lot of pain to actually structure them for success, involving by crowding in a traditional bank money, pension fund money. But a lot of times you'll find it really requires a long lead time, and decisions cannot be made, quite frankly. But I'm glad to say there was one transaction where we saw pension funds coming in, which I think will be the springboard for other things to happen. I'm not quite sure I have an answer today for the regulation. I think it's one that requires a bit more development. Thanks.
Okay, thank you. We have been warned there's 1 minute left. So I'm going to take concluding comments, starting with you, Fred, for 20 seconds, and then Michael, 20 seconds, and then we close.
I think I'll just quickly touch on the regulation one in 20 seconds. I think a lot of our markets, particularly the older stock exchanges, developed without regulation. Our own stock exchange here was conceived without regulation. I think for any new innovation, new products, we've got to allow regulation to fall back and allow for innovation to kick in. Regulation can come later. Once we've seen the cow is fat and maybe getting to obese, then maybe you can regulate. But until then, I think we allow innovation to proceed without regulation.
Michael?
The struggle you highlight is not unique to the exchanges. If you look at, for example, insurance penetration in most of our markets, it's very low. And I think there's an element of easing the regulations, easing the access, the aspect of ownership, that I actually own a stake in something, and amplifying what ownership actually means needs to happen. Thank you.
Thank you. Ladies and gentlemen, put your hands together for our panel.
Thank you very much, Tapelo and your panel. You may take your seats. Let's appreciate them one more time. Thank you so much. Fred, perhaps we'll like a group photo. You can move forward slightly. I've taken the liberty to invite Lina to join in, just so we have a lady on the photograph. That's better. All right, thank you very much. You may take your seats. Mutiga from Safaricom had mentioned earlier that Safaricom has or is introducing a 24-hour platform for people to be able to trade. The Safaricom team is here and would like to showcase that. If you can make your way very quickly up on stage. And as you do that, I would like to ask Mr. Stefano Falciani to be ready to come up on stage. and give a few words before our next panel. So Safaricom, feel free.
Thank you, Terian. So M-Pesa, and Kenya is the home of M-Pesa and innovation. And just listening to the panelists here, clearly there's a gap. So we like gaps because we believe gaps give us opportunities to disrupt and also offer solutions. So, so we've worked closely with the ecosystem, NSC, CDSC, and the market intermediaries, some of them represented here, to come up with a solution to give young people and people who are digital natives access to the market, right? So we've heard how people have gone to gambling. Why? Because it's easy to open an account and it's easy to transact. Now, taking that same story from gambling, we've now inverted that pyramid and brought it closer home to capital markets. Now, 70% of Kenyans and actually Africans are the youth between the ages of 17 and 35. And they are digital natives. And it's only fair for us to provide them with access to markets through digital platforms. Now, I have my colleague, Mweni, who is a young developer and is digitally native. And she's going to present what we've done, demonstrate what we've done, and hopefully you can see where this conversation leads us in trying to showcase something for this market and also the markets across. Welcome, Mweni.
Thank you, Kanye. Yes, so my name is Michelle Mweni. I'm a software engineer, and I'll just take you through what we've been able to come up with. So yes, we can go ahead and play that. So yes, so this would be the securities. It's a mini app which will be found on the M-Pesa platform. You'll just input your account number. Once you put your account number, this is your CDSC account number, you'll be able to see the stocks at that time. You should be able to buy according to the market price at that moment. Again, the amount you wish to buying, and then you can go ahead and just click on buy. It will trigger the M-Pesa payment, which is usually on the M-Pesa app. You can go ahead, key in your credentials, be it biometrics or just your PIN, and then you'll get your message that you have bought stocks. It's just that easy, imagine. And then you can go ahead and select one for selling, and then once you sell, again, you'll sell your stock at market price, of course. How much are you willing to sell? You want to sell only 10. Do the conversion, and you get the money again in your M-Pesa wallet. Easy peasy, right? So yes, that's how we're going to do it. We also have news, and we also have learnings just for education purposes, so that we can know as young people how then do we invest and how it's beneficial to us. Thank you.
So, and here is where you now bring in the young people. Where do you find them, Donald? Where do you communicate? Social media, Instagram, TikTok, Snapchat will be on your M-Pesa app so that you're able to talk to them because they are heavy on influential. They get influenced by the wrong people. Yet the professionals are seated in this room and don't get that message to them. That's why they're going to London and investing in London Stock Exchange, going to New York Stock Exchange. Yet we have a stock exchange here that can actually be vibrant. Now, Jane earlier talked about volatility of the stock market, and she would want to see, listed companies would want to see more volatility so they're able to see price discoveries and growth. We can only have that volatility if the 17 to 35-year-olds are in the market. The likes of myself and Bob are probably holding for maturity. We don't want to trade because we don't want to take risk. But they are ready to take risk. That's why they gamble. That's why they're able to do that. So we'll be able to do all this. And we believe with this, you can do this across the entire market. So M-Pesa has presence in over 8 markets. And you'll be hearing about that today. The same technology can be used across all these markets as we cross borders, just like Fred said. Thank you.
Thank you so much. Let's appreciate Safaricom for that. Easy, squeezy. There you go. Thank you so much. That's what they said. Mr. Stefano Falciani is right here from ARCA as well with a quick 5-minute sponsor message, and then we get to the final conversation.
So good afternoon, everybody. Let me thank you, first of all, Mr. Tapelo Tseole, for allowing us to be sponsor of this very important Congress in such an important also. Oh, thank you. In such an important moment, given that you are celebrating your 30th anniversary. And allow me also to thank the Nairobi Stock Exchange for hosting the event. Now, who is Stefano Falciani and who is ARCA? For the people that doesn't know me, allow me to spend a few words regarding me. As a background, I got my degree in economics and business administration, and then I started to trade, mainly govies, credits, and credit derivatives. And then I decided to jump at the other side and started to work as a managing director of a fintech company. A fintech company mainly specialized in trading platform in bonds and rate derivatives at the time, called the List Group, now part of Ion Trading. Most of you must know Ion Trading technology. And then I moved to London Stock Exchange as managing director of another fintech company called GateLab. Together with Millennium IT, we were packaging proposals for several also exchanges all over the world and several financial institutions. So I might have met you already in some occasions in London in the past. Since 2017, I moved to ARCA, and where I cover the role of I'm responsible for international development EMEA. Now, I wanted really you to know a bit more about us. It won't take much time, I promise. Last time I heard this promise, the guy spoke for 1 hour and everybody fell asleep. But I promise it's going to be fast. So ARCA is by far the fastest, the biggest fintech company in Russia and CIS, and provide a complete line of front-to-back solution for automation of operation on financial markets and their record keeping, and also solutions for trading infrastructure setup. So let me see if I'm able to move the slides. Okay, fantastic, thank you. Okay, so ARCA exists since 23 years, established in the 2000. We have more than 350 clients worldwide and just a bit less than 250 employees that allow us to ensure technical support during trading hours on most of the world exchanges. And the kind of model which you can use to our solutions can be in a software license or software as a service. You can see, okay, you can see here the coverage in terms of connectivity that is quite vast. It could be direct connectivity, or it could be through, let's say, partners. Now, let me spend a few words on our, sorry, I'm going back instead of moving forward. Okay. The exchange software, okay. The exchange software solution that is can be used to trade on several asset classes and with several trading models. And so far, 6 exchanges have been implemented using ARCA technologies on 5 asset classes: equities, bonds, forex, futures, and cryptocurrencies. So it's a platform that is genuinely multi-asset class. In terms of capacity, the system is capable to process 5,000 transactions per second with a transaction latency under 200 microsecond. And it's easily scalable up by adding matching engine modules to the configuration, or via, let's say, adding also servers at location where the users are concentrated. You can see here the trading infrastructure. There is the main system is here, the terminals that are given to the market authority to control the system and configure the traders, brokers connections, reporting system, and settlement systems. In terms of the trading platform, that is a trading platform that can be used for desk operations, so prop trading, and to connect clients, so for brokers, is completely multi-asset, multi-venue, and broker neutral. In terms of client servicing, it can be used in the DMA, voice servicing, and trust management. This is the structure of the platform. We have also some algo and HFT solutions, but anyway, what is relevant here is that the program is implementing using the client-server technology. You can see the server at the center with the user terminals, the connection to the information provider, and trading venues, and the quick administrator. In terms of, there is quite a lot in terms of risk management that is embedded in the platform, like initial position loading and recalculating by operations, limit controls, and fund adequacy checks. This is another relevant part. We have a full range of ways to connect to our system, from the desktop, that is the main workplace of Quick, that is used by professional traders. We have a web terminal that could be used also by professional traders if they do not trade from their trading desks, and could be given to retail clients, and as well as the iQuick X and iQuick Android X, that is the quick application for iPhone, iPad, and work also on Android services. During the period of selection, ARCA commits to make presentation and webinar to give a closer look at the solution, testing opportunities on testing ground of ARCA technologies, and also installation of the system and training of a client IT staff, of course, and consulting on integration with other software platforms. So our interest is to contact and establish contact with all the exchanges that are here and all the brokers. Thank you very much.
Thank you so much, and I think you should just remain right there, because at this moment I want to invite very fast. I know we just had tea, but lunch is still getting warm. So I want to request Lina to kindly come. She's our moderator. Lina is the ALP project manager. Round of applause to her. Please take the stage. As well, she will be joined by Mr. Stefano on the panel. We also have Mr. Bad Youssef, the Chief Strategy and Transformation Officer at Bodi Casablanca. I just hope I got it right. There you go. And we have Miss Monica Oraro as well, Business Development Manager at PAPS. And finally, Mr. Sami Mutua, Safaricom PLC. Excellent. They're still walking in. Very well. Thank you. Please. Welcome. This session is about empowering cross-border trading, leveraging on digital platforms. Over to you, moderator.
All right, thank you very much, MC, and to my fellow panelists. Thank you very much for agreeing to sit on this panel. Yeah, so there's a lot of pressure now. We have to, rush before everybody walks away for lunch. So, but we'll blame it on the previous panel that went on a little too long. But it's a great pleasure to have you all here. And I think just to create a background for the panel, you know, this is a topic that is very, you know, dear to me. It quite resonates well because of the African Exchanges Linkage Project. And so as we talk about the, you know, cross-border trading, I think there's two aspects to this discussion. First of all, it's cross-border trading and the, you know, the digitization of all these processes that will make the, you know, the process a lot seamless for cross-border trading. And also just, you know, with the AFCFTA as the background of this, you know, we will get to hear from the panelists the great things that they are doing in their various capacities to enable cross-border trading and to make that process seamless. So we have already had a great introduction from Stefano, so I'll just give the other members a chance to introduce themselves. We'll start with the lady, Monica.
Good afternoon to you all. My name is Monica Oraro. I am the head of product and business development at PABS, and I am here representing the CEO, Michael Balu, who sends his apologies, and looking forward to the discussion.
All right, thank you. But sorry, every time I mention PABS, everybody asks me what is that. So if you don't mind, please just say out the full name. Thank you.
Okay, so PABS is the Pan-African Payment and Settlement System.
Thank you. All right, so over to you, Sami.
Thanks, Leah. Good afternoon, everyone. My name is Sami Mutua. My responsibility is looking after the payment capability for M-Pesa across the African footprint. And we are today, as I think my colleague Kanye said, we are in multiple markets across East and Southern Africa. And I'm really looking forward to engaging with the panel as well as engaging with the forum.
Thank you, Sami.
Good evening, everybody. I'm Bad Ben Youssef. I'm the Chief Strategy and Transformation Officer at the Casablanca Stock Exchange. I used to work for the stock exchange for roughly 14 years, and very happy to be here with the partners, colleagues from other stock exchanges to share and discuss critical topics and really try to develop our market, respective and integrated markets.
All right, thank you. Thank you very much. Welcome, everybody. So just to follow the last panel, the discussion that was, you know, when Mr. Shiole asked about, you know, the success of the ALP and what the problems that face ALP could be. So Michael from Safaricom did suggest that, you know, the payment processes has to be streamlined and made easier. So today we are very honored to have, you know, Monica from PABS, who will tell us, you know, a little bit of what the Pan-African Payment and Settlement System does and how it will make cross-border trading of not even just exchange-listed securities, but, you know, all trade, all cross-border trade in general. So please do tell us a little bit about, you know, what exactly the Pan-African Payment and Settlement System is and how it will enhance payments across the continent.
All right, thank you very much. So PABS, the Pan-African Payment and Settlement System, is the payment engine that has been developed to be able to facilitate the African Continental Free Trade Agreement. So as this agreement was put in place, the consideration was that as trade and goods and services are moving across Africa, there's a need to make sure that payments are able to do that seamlessly as well. So what then happened was a look at the way payments are today. And if you look at the different regions across Africa, you have payments operating quite well in particular countries and regions, but it's quite siloed. So for instance, if you want to move a payment from East Africa to North Africa, it may not be as seamless as moving a payment, for instance, from Kenya to Uganda. So PABS came in to play the role of a centralized financial market infrastructure. So it sits in the middle. It connects all the key payment players across the continent so that it doesn't matter where you're sending a payment from. You're able to do this payment as an instant payment, and you're able to do this in your local currency as well.
Right, thank you, Monica. So again, this panel touches on two aspects. It touches on, like the cross-border trading and also on digitization of all these processes. So, Stephanie, you have given us a great introduction of ARCA and what they do. So maybe if you could just, very briefly just go back to that and just explain how ARCA is, or rather even just how exchanges and other, investors across the continent can take advantage of the digitization of a lot of these processes. So just give us an overview of like how tech is making this process a lot easier.
Yeah. Well, ARCA, for ARCA, it has been a necessity since starting to leverage the digitalization, because we started by servicing clients that were trading both in Russia and in London, because the Russian securities were traded in both markets. And so since then, our platform has been designed in order to deal with different markets and different currencies. And we then embraced the digitalization since the starting. I think the digitalization is very important for a technology provider like us in general, because these allow to offer to investor a leveled playground. They democratize. They offer the possibility to democratize the financial investment by offering the same level of access, not only to trade services, but also to trading, to information and analytics. So I think it's very, very important.
All right, thank you very much. And so, so what is your vision about Africa? And how do you envision that Africa then could take that on? Because you mentioned that, other countries have been able to, facilitate those processes. But so bringing it down, like what are the, plans, or rather, how do you envision that Africa could also benefit from those processes?
Well, I believe that the technology is there. So it's mainly to, let's say, wait for even the regulatory playground to be ready to service that. Again, as an example, regarding ARCA, the traders that are using our platform can connect from different countries, and each terminal and each trading flow is treated according and complying with the local regulations. So the technology to do all this is there. Then we heard even from the previous panel that there are probably, let's say, other issues to be solved, like the liquidity of the financial markets and the capability to attract investors. But again, the technology is there and they're ready to go.
All right, thank you very much. And so coming to you, Sami Mutua, just following the presentation, the very elaborate presentation that we just got just before this panel on what what Safaricom M-Pesa is doing to enable trading. First, I know that you're probably, or rather you have started with the Kenyan market. So, but then as we go into cross-border trading and even just through the AELP and all other kinds of market integration, how does M-Pesa plan to, open up all these opportunities and integrate Africa? And then also, let me just, get your two questions in, another question in with that one. We do have PAPS, that is guiding the African integration. What is Safaricom's agenda to integrate with other service providers such as PAPS, even ACA, anybody else that is already facilitating cross-border trading?
So I'll take your questions in reverse. Let me start with how are we working with partnerships such as PAPS, such as ACA, to try and get our solutions out there. And to be quite honest, I think the fundamental thing is to understand that, despite the fact that we started out as M-Pesa, primarily to facilitate the send money capability from one individual to another, over this last 16 years, our business has morphed. We no longer look at ourselves as a product, but we are looking at ourselves as an ecosystem. And that's a massive distinction, because ecosystems allow anyone to connect to us and leverage our scale and capability. So across Africa today, we are offering services to over 60 million active consumers, about 1 million SMEs, and overall about 5 million businesses are connected on M-Pesa. So we have this massive ecosystem of individuals, businesses that are looking for solutions. And what we want to do as M-Pesa is encourage strategic partnerships that are aligned to our vision. So we've already initiated conversations with PAPS. I think we are basically in the process of trying to figure out how we are going to move our solutions, not just to our own ecosystem, which is the 8 markets that we're talking about, but how do we move to markets where we are not, we do not have a presence. However, what we do know, being in Africa and having a mobile-first mentality, all these African countries have different forms of mobile payment capabilities that are not integrated. So we want to be at the heart of that integration. So we're working with various partners. We've built on our API capabilities. I'm trying not to be too technical, but our API capability allows a single connection to open up our entire ecosystem. So from that perspective, we think we are already primed today to enable any strategically aligned partner to be able to offer services across Africa. Going back to your first question around, now, so M-Pesa has been involved in trying to simplify, and in the previous session, a lot of mentions of comparison that there's a lot of capital flight to betting and other forms of get-rich-quick schemes. What we understood a long time ago is, along with capital follows growth, but also capital follows simplicity and information. And that's one thing that we note, that with the capital market, there are not a lot of experts out there that are putting out information for people to make informed decisions. So within M-Pesa, what we've done is we've engaged with the CDSC, we've engaged with the Nairobi Stock Exchange to be able to demystify this to all 32 million customers in Kenya. And in each market, we're doing the same thing. And the reason behind that is our experience in mobile payments has taught us that if customers are fully aware, if customers have transparency of information, then they're willing to move towards a particular situation. The consumer education has to come first. So we've worked with not just the stock exchanges, we've also worked with the government to be able to launch, for example, the Hustler Bond, which is basically a reintroduction of what we used to call M-Akiba before that. And the objective of this is to leverage on the various capabilities that we have in place, the customer base we have, but we also, like I said, strategically aligned. And we heard from the president this morning, we are strategically looking to see how can we bring capital in to support growth. And since we are primed to do that, and we do this across multiple products, we do find a test bed. More often than not, you'll find it's Kenya, but we rapidly evolve towards launching in all subsequent markets. We recently launched M-Pesa in Ethiopia, and the Ethiopian government has been very close to us in looking at how do we digitize payments beyond just send money and pay merchants. How do we bring in government services? How do we bring in investment services into that particular ecosystem? So we have built the ecosystem, and what I'm hoping comes out from today is all the different representatives from the different stock exchanges can sit down and look at how do we partner together with M-Pesa to be able to drive with information, transparency, and then finally being able to bring in a new wave of investors into the various stock exchanges across Africa.
All right. Thank you. So just following on what you have mentioned about, information and also just about, the stock exchange structures and everything. So this question goes to you, Bart. How do stock exchanges, I think there has been a lot that has been mentioned also about security, cyber security and regulations around this. So we do understand that even just with the AELP, there have been a lot of discussions about regulations, about, access to the data, trading data, and even just going beyond the technical aspect of it. So as a member first of the African Exchanges Linkage Project and also as a representative from the Casablanca Stock Exchange and other exchanges, how do you envision the digitization around cross-border trading and also even just for local trading? How do you see that?
Thank you, Lina, for the question. In fact, I think the most important for a stock exchange in his perspective is to build a very strong technology system. At both Casablanca, we have implemented an electronic platform early in 1998, I think, something like that. And since that time, we continue to strengthen our platform to work on putting in place the best standards in terms of information system, in terms of business continuity. It's all that the technology and all the process are very important for giving the confidence to the market that our technology works and works well. After, when you have this strong technology, you have to disseminate it. We produce a lot of information. We collect a lot of information from our clients, investors, but mainly issuers, with all the information publicly published by these issuers. And we have to give the opportunity to all the public, all the investors, to have access to this information. And so we have to be sure that this data we disseminate has been verified and is the real data. So we put a very, we verify and control a lot of what we produce and disseminate. And after, we have to find the channels to disseminate a lot. So we have a website, we have a mobile app, we have different channels to give all the information we produce and we collect. And we have, as all the exchanges, we sell our market data to other, how we call it, diffuser, data vendors. Thank you, data vendors. And when you do all that, it's not enough to develop cross-border. It's enough to give the information to the market, to have their confidence about what you're capable of trading and securing their transactions. But to develop cross-border, you have to go beyond that. And digitalization is very important at this time because we see the development of a lot of very interesting and well-known trading platform, open to everybody. This year, for example, we have put our market in a TradingView platform. TradingView is 30 million users around the world, but they have only our information. Now it's up to the brokers and the ecosystem to connect also to TradingView and give the opportunity to these users to trade directly from this platform. I think that's the most important thing to do now. It's to try to find partnership with fintech, with the new platforms, and to have a new revolution of our system. We have on the 90s and 2000 a revolution of IT platform. Now we have the revolution of digitalization and perhaps AI coming, but first is digitalization and this big, huge growth of trading access to the information.
All right, thank you. So, and you know, from previous discussions that, especially the previous panel, it was mostly about, the quick action that, the young generation want to, like go to their phone and do everything. And even as I see up here, most of us are using our phones to, like take our notes and everything. So I just want to find out, Monica, in this very fast-moving world, the one question that I get asked every time is, okay, so if I am able to trade in another market, how do I move the money there quickly? How do I get my dividends paid back to me? How do I get the currencies across the continent? And how fast is that process? And again, just highlighting the partnership that we have with PAPS, please just shed a little light on like the transaction costs and the customer experience and what we do anticipate that PAPS will do both for AELP and also just for cross-border trading in general and the transfer of funds.
All right, so I think I'll start by giving a real example, which we've had on PAPS. So the first stock exchange that we worked with, just to be able to see how it works practically, was with the Nigeria Stock Exchange and the Ghana Stock Exchange. So we had brokers then being able to carry out the trades as they do today, and then we worked together with the settlement banks. And what was different was that they were able to pay for a cross-border transaction using their local currency. So that was the first thing. The second was the speed of the transaction. So in engaging ALP as well as the stock exchanges, we understood that the trade cycle today is typically T+3. With PAPS, it's possible to do this payment, and we saw the payments taking place in about 120 seconds, which then also helps to support the ambitions to make the capital market transaction cycle to be T+0. The third was the transaction costs. And typically today, if you're doing a cross-border payment, then the route the transaction takes is a correspondent banking channel, which then means it passes through a number of parties. Sometimes it takes a number of days. But with PAPS, what happened was that there were just two parties, the settlement bank in Ghana, the settlement bank in Nigeria as well. And this allowed us to significantly reduce the cost of transaction, actually to more than half in terms of savings.
Thank you. So, yeah, we do appreciate the work that PAPS is doing to ease cross-border trading. And so maybe just because the MC has his paper every time. So I already have my paper that we're running out of time. So maybe I'll just give everybody 1 minute to, just give your overall, thoughts and ideas about the future and what you see. And I think the other question that had been asked previously by Mr. Shiole is, the success of ALP, the success of cross-border trading, and how you envision that this whole process could be easier. Maybe we can start with you, Bird, with just 1 minute of bringing digitization into the success of cross-border trading as a summary.
I think, and I'm convinced that we have the technology, we have the capacity to develop partnership with fintechs and to build a really good system. But I think the most important, it's the business. We have to go back to the business. Where is the business in Africa? Where is the business between our countries? We must develop trading, real business trading between our countries, and then have the stock exchanges be tools used by these businesses to develop. And I think it's the chicken and egg. We can build everything, but without business, we can't do anything. So let's work on business.
All right, thank you.
Yeah, I agree with that analogy. I think mine is a slightly bit different from chicken and egg. I think most of the time from a technology perspective, engineers, and I was having this conversation with one of my colleagues during the break where I was saying, the days of if you build it, they will come. Those are days of, those are the past, right? We have to leverage on our data and we have to leverage on value, right? We, and every exchange in this room and the people we serve, which are the businesses, have a gap. The gap is we're looking for, as a business, I'm looking for capital. As an exchange, I'm looking for people to come into that exchange, right? And offer their capital so that we can capitalize the businesses and be able to move forward, right? And then you have the technology. I think you're absolutely right. The technology is there. I think one thing that we are leading the world is on mobile technology, which has connected everyone. What we're not doing is we're not leveraging on the huge amounts of data that we have in the respective ecosystems, right? To be able to bring in value. And therefore, what we are looking for is, as we engage, is can we use the data we have? Of course, and I'm a big believer that regulatory needs to be there, but regulatory doesn't need to be a gate. Regulatory needs to be a partner in the journey. So that how we are going to utilize, so that they can put up the right controls for the consumer and ensure that we are offering easy access to the end consumers and bringing value into the whole entire ecosystem.
Great, thank you. Yeah. I agree, yes, we could clap for that.
Well, I completely agree with my the two panelists that with what just they said. I just can repeat that. I think that really the technology is there and can help to connect all the people and democratize these markets. I think that I'm very confident that this project that you are running is going to be successful because I do believe that the future is here. So, and I hope that I will be capable, we will be capable to be a facilitator of this success.
Thank you. Over to you, Monica.
All right, for me, I look at it in two ways. The first is that I think the future is definitely instant, as we've seen throughout the course of today, the discussions and the demos as well that have been done by the various parties. And the second one is just the ability to be able to bring all the key players together. So being able to collaborate so that both on the technology side, on the trade side, on the payment side, who wants to invest or who wants to take advantage of the capital markets can do so.
All right. Thank you. Thank you very much to the panelists. I think we will take a few questions, one or two questions from the team. But I think, sorry, just to recap, I think, the key takeaways from this is that, yes, so the Pan-African agenda of cross-border trading is possible. And, even with technology, then we need to follow up with the business. And the regulations should not be prohibitive, but that they should be enabling for cross-border trading. So thank you very much. Now, over to you, MC.
Just two questions, please. There's a hand at the back. Any other? Just come in this way. Please don't give background, just straight to the question. Lunch is waiting.
Shadrach Manotti from Kingdom Securities, representing the MD for Kingdom. My question goes to the PABs. The question is on, since the initiation of the Pan-African payment system, what has been the impact on the volatility, especially on the dollar, and maybe other major currencies, the euro and the sterling pound? Thank you.
Excellent question. Any other here? Just checking. I think we only have that question. Very good. Please.
All right. So as I mentioned, for PABs, our key focus is to enable anybody doing payments to do local currencies or to use their local currency. And so doing that in the context of a continent where predominantly USD, euros are the means of doing cross-border payments has been one of the biggest challenges to overcome. So, for instance, we see that when you're doing an exchange between two currencies, then the reference rate is, for example, USD, or it might be euro, depending on where you are. And we've also seen that in the different countries, the dollar has been gaining, especially against the local currencies. So, for us, we recognize this reality. But as we do that, we are looking at, in the long term, how do we then move away from having reliance or having to deal with, say, the current volatility of the hard currencies, and then just empowering the African countries to be able to fully use their own currencies. So there are a number of things that we are working on, including working with a basket of African currencies, also looking at the ability to do swaps between local currencies as well, as a long-term measure to deal with the current issues when it comes to the stability of the hard currencies.
I think that's it. Thank you so much. Lina, do we go for lunch or?
No, we have a few more minutes.
No, we don't.
More questions. We were only at question 3, so.
Okay, no worries.
But anyway, yes, thank you very much to the panelists and also to the delegates. I think we may go to lunch.
Thank you. Let's appreciate the panel. Appreciation for that. So, ladies and gentlemen, it's that moment where we go and enjoy our lunch. But just before you leave, very quickly, we have ashes that are giving you the milk cards, and even as you walk out, you'll get that. I have just been reminded that if you did not register at the front desk, I mean, they're just outside, make sure you have done that. I think that's it. So we'll be right back here in 45 minutes. That means by 2:30 max. I've added a few more minutes for the ones who like the third serving. Make sure you're here within that hour. But just before you go, okay, so as the milk cards are coming in, just give us a minute. We want the president to kindly come, join in this photo. We want to take a photo. And we also have some amazing gift hampers courtesy of the Asea team. There you go. We're going to give you these awards. Just There you go. We have this photo moment. The ashes kindly give in the milk.
Everyone. Good afternoon. It's good to hear all of us awake again. First, let me extend my congratulations to Asea on this 30th anniversary and to Nairobi Securities Exchange for hosting this wonderful homecoming to the birthplace of Asea. Today, I'm joined by indeed a very, very distinguished panel, and we'll try to attempt two things this afternoon. The first is to discuss actionable items to address the liquidity problems of our exchanges. The President mentioned it more than 3 times. The Chief of Staff did the same. EABL did the same. Every panel has talked about the illiquidity of our securities market. So that's the first one. The second, which is more difficult for us, is how to do so in a manner that keeps all of us engaged and awake after a very, very generous lunch. So please bear with us and keep your attention and your questions here. Before we dive in, I want to share a few statistics from the World Federation of Exchanges about the liquidity situation on our markets. In fact, they determined that only 2 African securities exchanges, Egypt and Johannesburg, have liquidity ratios above 20%. And that is often the minimum required to feature in emerging market indices like the FTSE and the Morgan Stanley Index. In fact, most of our African securities exchanges have liquidity levels of below 2%, including my own Ghana Stock Exchange, where we look at the equities market and we have a liquidity ratio of about 1%, and yet on our fixed income market, we have liquidity ratios of over 120%. So for us, as we develop our equities markets, how we improve liquidity on these markets is very, very important for us. My first question will go to you, Tapelo. Please share with our audience a key initiative that Botswana has implemented to improve liquidity over the years.
Thank you so much, Abena, and good afternoon to everybody. I'm so happy to be here today. Yes, like the moderator has already highlighted, the President has sort of laid out the importance of liquidity as an enabler for investors as well as issuers this morning, as has our moderator here. So the assignment for exchanges really is in 3 ways: to increase or promote the increase in investor base in terms of diversity, and also to increase the number of issuers in our respective markets, as well as to address issues of market infrastructure in our markets. So from the Botswana Stock Exchange perspective, we have mainly focused on 4 levers. We have looked at issues of regulation, we have looked at product innovation, and we have also looked at financial education, and we have looked as well at infrastructure issues. So in terms of my delivery this afternoon, and to respond to your question, Abena, in terms of a key initiative that we have implemented at the Botswana Stock Exchange to deal with liquidity issues, I'm going to focus on education as well as our lobbying initiatives, because I feel like that's an area that we've been spending a lot of time on as an exchange. So what we've essentially done is that we have looked at the various segments that currently prevail in our markets and came up with targeted messages and ways of engaging with those segments. So if you look at issuers, for example, we have developed a business development initiative where we engage companies end to end and take them through a journey of educating them about being listed, and also assisting them in terms of corporatizing through, for example, our mentorship program that has been very well received by our companies back home. We have also specifically looked at the retail sector because earlier on everybody was talking about how do we get the retail market to respond and how do we craft messages that will be understood, because we do have other products that currently prevail in the market that the retail market would rather buy into. So we've come up with various initiatives of engaging the retail sector through various touch points, because you can't focus on one channel. For example, you can't focus on the online market only because we know our African countries and the structure that currently prevails, in the sense that you have other potential investors who are in remote areas of the country and all of that. So that's what we've done with the retail sector. We've also done a lot of lobbying, and I need to emphasize this one because government, like the president was saying this morning, he came up with certain messages. He mentioned certain initiatives that the government is doing to help the capital markets. So we do engage closely with government, particularly on the issue of SOE listings, because we feel that that can also unlock potential in the market. And of course, us joining the AELP this year at phase 2, so we also look forward to the potential benefits that we can get liquidity-wise from the AELP. Now, without taking too much time, I just wanted to highlight a few statistics in terms of the quick wins that we've been able to sort of get in the last 5 years, particularly in this year. We've seen our investor base grow by more than 100% in the last 5 years. Our investor profile has been quite impressive in terms of local and foreign investors. This year, our market cap grew by 50% as a result of one trade, which was quite a milestone for us. We had an instance where we issued 47 bonds in one day, and we registered the biggest trade this year of 2.8 billion, which was quite impressive. So all of these have sort of stimulated and shot our numbers up, in a short space of time. We do acknowledge liquidity is a big problem in our market. We still have a long way to go, but we are very much committed. Thank you, Abena.
Thank you very much, and there's a lot for all of us to learn from that. Now, next person I want to ask a question is Donald. Donald, you're doing something that I find absolutely fascinating. Donald is with Standard Investment Bank, but even more interesting is that he's the first and still only robo-advisor in the financial markets here in Kenya. Please share with us what is that robo-advisor? How does that drive liquidity? And any other initiatives that the Kenyan market has adopted to drive liquidity? Because at 5.2%, even though it's still low, you are one of the better performing when it comes to liquidity.
Thank you very much. For a second there, I thought I would have to compete with the statistics that we just had. So I think where I want to start is a problem statement of being boring. Right? If we were to take Kenya, about 75% of the country is under 35. And they are digital natives. So I remember leaving high school, and I had to do a little course called computer packages. And that course was the equivalent of giving me a passport, a visa to enter into this digital space. The people, or the majority of the country today, are native. They were born swimming in it. And they are to the extent that one of the things that we have to worry about as parents is dopamine addiction, where my phone has so many dings, bings, and sounds that my mind is just constantly tuned to this. So now the question becomes, how do we bring that environment into the investing space? And one of the things we see is that I need to be able, and there's a lot of discussion about day trading, which is going in within the day, but there's a rather large missed opportunity, which is swing trading. Buy today, sell in 2 days. Buy tomorrow, sell in a week. And that allows me, if I was to use my phone, to get my own dings, bings, and little shakes on the phone. And that fits very well with the environment, with this young person. So tomorrow he's getting a little ding about some betting thing that he did. The next day he's getting a little bing about EABL and that it's a good price to buy. The third day from there he's getting, it's a good time to sell EABL. And so you're swimming in the environment that he naturally walks into. And so with robo-advisory, what you get is a system that consumes the material, the research material, the data that we must all consume. And in the case of my company, Forefront, we consume 6 years of data to make one decision. And that decision comes to the client as a bing, right? On their phone, they're taking, they're going to a party and they get a little bing on their phone saying, I think you should look at EABL. I think you should look at Safaricom, right? And that gives the dopamine rush that you get from a gambling event. Once you have that, the only thing you now need to put in front of this person is a little buy button or a little sell button, and you're in their environment. And so if I was to give it that way, it's about capturing the imagination, attacking the emotional element, gamifying the system so that you're hitting all their dopamine levels, all their serotonin levels, and the rest. And with a bit of luck, you are off to the races. Thank you.
Thank you very much. The bings, the dings, and the dopamine levels. We must stop being boring as securities exchanges, right? And be in the hands of the youth of Africa. Mwathi, EFG Hermes has been driving foreign investor flows as well as encouraging a lot of local investor flows into our capital markets. What improvements have your clients seen in terms of liquidity over the African landscape over the last few years?
Thank you very much for the question. I don't want to sound too depressing, but it's been difficult. But I think the situation that really made things quite nerve-wracking for a lot of foreign investors was the shortage of FX, and the FX queues that we saw in markets varied from Nigeria to Kenya at some point. However, what this has created is an opportunity where things are as cheap as they've ever been. I was looking at some data on Kenya, and Kenyan stocks are 3 standard deviations from the mean. When you compare it against all emerging and frontier markets, Kenya is priced at a complete outlier. So this is really creating a once-in-a-lifetime opportunity for people to get involved in the markets. Now, unfortunately for African markets is that in the last 4 years, the competition has gone up. And the competition for every dollar that could come to Kenya is in Asia, where you have also troubled markets like Bangladesh, for example. But you also have some super vibrant markets, like what's going on in Indonesia, Philippines. So we just have to work a little harder to sell our investment case. But certainly, there's no lack of opportunity. So I think the liquidity situation has been frustrating, but I think perhaps this is now opening us up to have a different conversation. Perhaps we should not be so focused on the foreign investors. We should be looking at the domestic investors. The Kenyan government, for example, is spending a lot of time and effort to get us to save more. Kenyan savings were in cattle and land and those types of assets that you knew where it was, but now they want us to be in financial assets. So the question that we need to ask, and it came up earlier in the day, is that are there the opportunities to invest these financial assets? And people always say no, but they are. They're there. I mean, they could have funded the expressway, they could be in geothermal power stations, they could be trading carbon credits, they could be doing all sorts of things. So I think that really is the conversation that we should be having and the opportunity. How do we grow some of the stuff he's talking with the robo-advisor, that's really fascinating. How do we grow that retail investor we know is in betting and getting the dopamine from betting? How do we bring them into our market? How do we get that asset manager to avoid what we were just discussing, the Ghanaian disaster of having your bond portfolio restructured. You know, if you talk to a portfolio investor in Kenya, they think, well, the default is never possible. I'm sure in Ghana, as we spoke about, it seemed not possible, but it was possible. So I think we all need to start thinking about how do we encourage those pools of capital to be more liquid. Within T+3, you have your money. You could have it in T+0 in some markets, in some instances. It's liquid, you can see it, no one's going to run away with it. So I think this is really what we really should perhaps start thinking. And I think what's also interesting in the context of what's been discussed here in terms of linking the different stock exchanges is that, you know, we act for our clients across a lot of Africa, but there are very few institutions that I see that are African investing in Africa. And when you sometimes investigate some of those pools of capital, you find out they're actually very, very large. And they're investing out because they've outgrown their own domestic markets and they really have to just diversify out. But I think we need to start having the conversation, and the linkages thing is really interesting. How do you get high net worth individuals who might have a house in Cape Town, maybe to think about perhaps should they participate in the JSE, or, you know, someone may have an interest in the oil industry, maybe Nigeria or Morocco, which is a very interesting market, and actually giving you some exposure to electric cars. They're about to have an IPO in the electric car industry. So I think there's a lot of opportunities across Africa that Africans should start participating in, and using those domestic pools of capital to do so will be a great opportunity for all of us, and a counterweight to the foreigners. Foreigners come and foreigners go, but we're here to live, yeah?
Thank you very much, Muathi. And I think your point about the linkages is great, and we will come to that in the second segment. But before we go on, Sunil, you have been one person who has seen our markets develop almost, from when Asea was founded. There are two African markets today in the emerging market class. And for us to transform from a frontier to emerging markets, we really need to solve our liquidity issues. What do you think needs to be done to tackle this conundrum?
Thank you. And first, thank you, Jeff, for pulling this together and having me here to participate in this panel. And thank you, Chair, for introducing the discussion. Well, I think it's a $1 billion question. I think you are doing some great job, Donald, and I would like to know more about this, because I think these are the kind of out-of-the-box thinking that can eventually make a difference to the ecosystem in which we operate in Africa. But I strongly believe that to tackle, although this has been the tough nut to crack. In fact, I've been looking at the statistics and the data on African exchanges over the last 30 years, and what I've seen is there's been tremendous progress that has been made from different angles in terms of improving the technology, improving the regulatory environment, improving the governance structure of exchanges and so on. But there's one tough nut that we've not been able to crack, and that's the liquidity issue. And of course, how do you go about doing it? I think, in my view, there are what I call the 4 Ps of the ecosystem that we need to try to get aligned, so as to be able to make some progress on that. And those 4 Ps are products, they are players, getting more players to be part of the ecosystem, they are partnerships, and then the 4th one, which is very important, is performance. Of course, for time's sake, I'm not going to go into those 4 Ps. I'm going to focus only on one, which is the performance one. And here, what we're talking about is performance from the company, listed companies or listed products level, but we're also talking about performance at the macro level. And in my case, I'm going to put a lot of emphasis, because I've been following, as you say, the markets over the last 30 years. And what I've noticed is whenever the macro environment in Africa is doing very well. Those are the times when we attract a lot of interest and we manage to stimulate foreign flows, but also domestic flows. Of course, this has to be in conjunction with the performance from a bottom-up standpoint, that is, from the company's standpoint. And when we look at what has happened over the last few years, this then explains why it's becoming more and more difficult for African exchanges to attract not only global order flows from the foreign investors that we want to attract, but also, as you mentioned, we are now even grappling in terms of getting the local investors to be very active. And to highlight what the point I'm trying to make, I will take the case of Mauritius, but also of a few other jurisdictions within the continent, where the investor today has a million choices when he's trying to see where to put his money. A million choices, meaning that he's sitting on the beach in Mauritius and through his iPad, at the click of a button, he can transfer money into the shares of NVIDIA, of Microsoft, and of course he's comparing those companies against those that are listed in our exchanges, and he's making his choice on what is the best risk-adjusted return that he's expecting to get from those investments. And this is where I believe there is the company performance level that I've talked, but there is also a very important thing that we tend to overlook is the macro performance. And here, if you look at what has happened, not only in African markets, but also in other frontier markets, emerging markets, Latin American markets, countries like Pakistan and so on, I mean, from a pure macro standpoint, the performance has not been good at all. And this has been reflected in the currency situation, how the currencies have performed against the dollar. This has been reflected in what the kind of inflation situation is. This has been reflected in where interest rates are going. So this brings me back to when you say that in the bond market you're getting, I don't know, 120% kind of turnover. Why? Because probably your bonds are offering double-digit nominal rates of interest. So how can you expect an equity product to produce year-on-year double-digit kind of returns if you are evolving in an environment where inflation is very high, where currency is very weak, and so on? So my point is there is a lot of potential, as you mentioned, I think from a historical perspective. Probably many of our markets are at historical lows in terms of their valuation metrics, but I think you need to take into consideration and discount those valuation metrics by the issue of how is the currency performing, and how do these investment opportunities that we have compare with other investment opportunities outside there, where the investment is being made in US dollar, where probably the year-on-year growth in earnings is in the 30%. So these are the real issues that we need to tackle. And for me, the best way to illustrate what I'm trying to highlight is, I was talking to Asea yesterday about the India situation and the Pakistan situation. So I've followed India very, very closely for the past 30 years. And I think in 1992, when they started the economic reforms, their economic situation was probably worse than Pakistan, okay, or probably more or less at similar levels. 30 years down the road, I mean, Pakistan has probably, I don't have the figures, but has hardly grown in terms of its GDP per capita in US dollar terms, whereas India has grown tremendously. Why? Because they have managed to manage the economy and that macroeconomic environment properly. And today, as you mentioned, I think India is one of the most vibrant capital markets in the world, and there's a reason why this is the case. I can tell you the total turnover, daily turnover in India in 1992, before the reform started, was less than $5 million a day in a country of 1.3 billion. And today, I think it is in stratospheric levels. It's $30 billion or whatever on a normal day on the cash market, and maybe 3 times that on the derivatives market. So this brings me back. Of course, there are lots that we can talk, but I think getting the macro environment right, ensuring that our currency behaves, ensuring that inflation is kept at relatively low levels, and ensuring that governance within the economy is great, I think will help a lot, because it brings me back. The best times for African markets have been when the economies have been performing and when the currencies and so on have done very well. So I think there's a lot of hope. Listening to the president earlier this morning, I think there's a lot of hope that, you know, we will see the kind of traction that we want, but provided we address some of those issues that I've just mentioned. But of course, there are many others, but for time's sake, I can't get into those discussions.
Thank you very much, Sunil. And I'm glad I came to you last. And maybe, Mr. President, this requires a policy session, Asea, with our governments, maybe to show up at some of their meetings and make a case. Because as our colleague from Casablanca also said, without strong businesses, without trading among ourselves, without growing our economies, our capital markets and the wealth creation that we need will continue to flee and elude us. But back on the subject of how to improve liquidity today through linkages that Moati talked about. We all know of the AELP, Asea's flagship project, with very, very good support from our friends at African Development Bank. And we have Akin here from AFDB with us. And it's really for us seeking to integrate our markets, provide the diversity, the bigger companies, the different industries of 2,000 plus companies, the different currencies, etc., to excite investment again for us. Some have described our AELP as a big, hairy, audacious goal of Asea. But of course, AFDB supports us. In your view, what should we do to accelerate adoption and implementation of this project?
creating new products for these different markets?
But I would say over the last couple of years, I mean, AELP is done in phase 2, 7 exchanges in the first phase. Phase 2 targets going to 15 exchanges. I'm happy to say that Ghana, Botswana are coming on in phase 2. So there's been some achievements. The platform is there. There was a live trading today. There was a previous live trading until sometimes end of last year. So there's a lot of work going on in that regards. I think now that the platform is there, what really we need to start seeing is how then can there be more liquidity, more flows. And I would like to mention that if you look at the supply side of capital on the continent, right, you look at pension funds, you look at sovereign wealth funds, or you look at insurance companies, the AUM, asset under management, is close to $2 trillion, right? If you look at the market, even under AELP, phase 1 and 2, market cap is about maybe $1.5 trillion. A lot of the AUM of institutional investors, it's in sovereign bonds, right? So we need to start thinking of how we can get some of that money to flow into the stock exchanges, perhaps through the AELP. Part of that might include regulatory change. There's a need to engage further with regulatory authorities, central banks. The issue of currency convertibility, it was good to see PAPs in the room earlier. There might be a need to engage even PAPs further on that. And then data tracking. We just need to start tracking the data to see exactly how much inflows we can capture through AELP. But I think over the last couple of years, there's been good progress. The IT is in place. Now we just need to move to actual execution, seed trades. Thank you.
Thank you very much, Akin. And I think it was our Vice President Celestine who asked whether institutional investors should have a floor instead of a cap in terms of investments in capital market activities. For instance, in Ghana, we saw that 99% of their AUM was in government securities. Fine, they offered great returns or perceived returns. They were deemed to be risk-free, but then a haircut happened, and they had to mark their books to market. And for the first time, they learned that fixed income prices also go up and down, and it's not just an equities problem. So I think it's an important point, and again, another thing we can take up on the policy side in terms of how we work with our institutional investors to be real drivers of our capital markets, as well as grow the retail side. Mwati and Donald, you as stock brokerage firms or advisors to investors on the market, you've heard about AELP, we've been onboarding brokers onto the platform. Is this a game changer for your business? Will this lead to the price discovery and better valuations that EABL was asking for?
Look, I think it's a product that is interesting and different, and it allows people to start being able to express a view in industries and sectors that they cannot get in their own domestic economies. So if you, for example, argument's sake, wanted to express a view on metals and mining, you can do that through South Africa very effectively. If you want to perhaps have exposure to Europe, Morocco is actually a very good way of getting exposure to companies very close to Europe. And similarly everywhere across Africa. So I think it certainly offers that ability to diversify one's portfolios, and I think that's a good conversation to have. Whether it's a game changer, I think now that comes down to the way it's marketed and presented to people. Because, and also, and this is something that I've been thinking about a lot, is also the little infrastructural things. So, for example, the trade that I saw earlier today that we all saw, the investor in Ivory Coast will have to buy shillings or is doing that in what currency? And so these are some of the little things that unfortunately stymie a lot of the great ideas that we have. Is just put yourself in that investor's shoes. So I think if we solve that issue of whether a Kenyan buying a Nigerian equity needs to find Naira, or how we're doing it, or how's the exchange rate working, and I think also the custody issue is a very big thing, and perhaps actually the cost of that custody. You know, it's very expensive. Sometimes custody can be $20,000 to have a custody account in a particular country. So it works for an institutional investor, but it doesn't work for a retail or a high net worth investor. So I think as we launch all these products, and I think it's a really, really interesting product, and I think it will do a lot for a particular segment. But I think we cannot lose sight of getting the really basic plumbing right. Where are your shares held? How do you pay for them? How do you get the exchange rate? What exchange rate do you get your dividends in, or where are your dividends? How do you vote? All this kind of stuff that we forget about sometimes because we want to have a really innovative market. So I think this is a really great thing. So I think how we package that, how we think about it, how we sell it on to investors, because I was also thinking about it. Who is this product for? Because a lot of the existing institutional investors already have the ability to trade all these markets. You know, if you go to a fund manager in Nairobi, they can very quickly trade Botswana or South Africa if they wanted to. So it's a question of activating perhaps newer funds, new insurance maybe perhaps, or you know, individuals or high net worth. So I think that's sort of the thing. So I think if we, to sort of answer the question, for me it would be plumbing. Get the little dot your I's, cross your T's, and make it as simple as possible to trade, and I think the money will come. Because I think that's why betting works, because it's very easy to open an account and fund it and get your money out.
Thank you. Go on, Donald.
Let me add to that excellent response. I think we need, so let me start with a blanket statement. I think that it is going to be just huge. But, right, and here's where the problems come. We have to think of it as under the table and over the table. We have to get all the plumbing right, and most people just don't want to care. So anything under the table just should work. That's just how you get me to the table, right? I am coming at this platform saying, of course it works. Of course you fixed the currency issue. Of course you fixed custody issue. It's not even a question in my mind. Where the value we will truly generate is making this like Amazon. I don't care where it is traded. I want this or that or the other security. And I want it invisibly in my portfolio, which is held regardless of the exchange, regardless of the custodial arrangement. All of that is that's just plumbing. It has nothing to do with me. That has everything to do with Mwathi, with me, with the exchange. That's your problem. As an investor, all I want is mining in South Africa. I want Safaricom in Kenya. I want EABL. That's what I want. And so hide everything else, because I am going to assume it just works. And if you get me to that level, I think it's just going to take off. That would be my view on that. Thank you.
So Neil, did you have something to add to that, or some responses?
Yes, I think both comments have been very valuable. But before I add something to this discussion, just wanted to rebound on what Akin was mentioning, where he talked about the value of pension fund money available in Africa, which hovers around the trillions of US dollar. So just imagine if we could get only 10% of that amount of money flowing into the equity markets. Would make a big difference. And Akin, I will start with you. Probably you need to get the pension fund of the African Development Bank to be more active on our African markets than what it has been. In fact, that was one of the main arguments that I put forward to the President Donald Kaberuka when I met him for the first time. I said, okay, ADB is the premier financial institution in Africa and has definitely a tremendous developmental role to play. And it goes without saying that capital markets is going to drive that growth and provide the necessary funding not only to private sector but also to the public sector. And therefore there's a need to, work very hard to lift those markets off the ground and get them going to play the kind of role that they are supposed to play. Coming back to the issue of the ELP, of course, without a doubt, this is a very important project. So from a conceptual standpoint, it makes a lot of sense. But as my two colleagues on my right have highlighted, I think there are a number of obstacles that need to be addressed for it to really deliver on its objectives. First, costs of cross-border trading. So you're asking the question, how does the investor, I don't know who bought, I think it was a BRVM investor buying Safaricom. I guess, in my view, he had to exchange his CFA into US dollars and then US dollars into Kenyan shillings. So already there are a lot of upfront costs that makes this deal less attractive than it could be had it been more straightforward. And then if he sells tomorrow, he goes through the cycle again. I mean, he sells shillings, get them converted into US dollar, and then I don't know in BRVM whether he can hold an account in US dollar, whether he has to convert that US dollar in CFA. So this is clearly an obstacle, but I know that PAPS is trying to resolve that issue. So that's a critical issue. Costs of cross-border trading has to be brought to the lowest denominator possible so as to make this initiative attractive from a cost perspective. But of course, investments are always measured on a risk-adjusted return basis, exclusive of costs. So let's assume that we manage to sort out this cost issue. I think then the next kind of obstacle that we need to tackle is intelligence and knowledge, market intelligence and knowledge. I think that today the Mauritian investor is not aware of the tremendous opportunities that exist either in Kenya or in BRVM or in Morocco or in Nigeria. I think these seem to be very far away markets. So our challenge is how to make those attractive investment opportunities close to the investors that we are trying.
Like some of these platforms can provide research to the AEOP.
Straight to the point, let's go.
So I agree with Donald, what he mentioned, that to increase the liquidity, we would want to, increase the dopamine into everyone. They trade on the same day, they buy, sell, or maybe a swing trade. But to do that, 5% gain maybe in a swing trade, maximum 5 or 10%, the upper circuit is that level. And our various charges might eat into their profit of those 5-10%. And that is one of the reasons why the gambling people are not moving into these swing trades or others. Please let us know what is your view on that and how we can tackle that. Yeah.
Another question, please. Just checking with his hand. This is good. I think we're going to answer that. It was quite clear. Yes, Donald.
Thank you. That's an excellent question in terms of the cost eating into the profit. So there is a distinct value to the dopamine hit. And that is the primary value in gambling. That's the primary reason why I would assume this room probably has 150 worth of phones to people, and with every 2 or 3 minutes, somebody has to look down. It is a human aspect that has been plugged into it. And so that value, if you keep generating it on a day-to-day basis, what you will have is an individual who comes to the market multiple times. And so their smaller value add up. So if you give them a mechanism to be able to then see the total gain over a longer period, you get substantial value, right? You'll be able to have month or can see how they have progressed. Cost really becomes an issue when you go down to day trading. Because day trading, some of our exchanges, the cost barrier is a little bit higher. And so you'll start getting into very difficult conversations with brokers in terms of how to manage that cost. But if you push it out to swing trading, all those conversations go away. And if you are able to keep giving this person or satisfying their dopamine need, so we have to be in a world where we have to understand we're in a world where dopamine addiction exists. And so you're satisfying a biological need by this function, and you'd be able to get a lot of people to work very well. Perhaps I can give one example. I know it's supposed to be a short. There is an app in Kenya that was recently launched called Chums. And it's interesting, it's a savings app. And what's interesting from the last talk that the CEO gave, all their messages are 5 p.m., on Fridays at around 7 p.m. And they're geared towards, I know you're going to the bar, why don't you put 300 shillings away to give yourself permission to go to the bar? Right? Very simple behavioral change. Substantial growth. They are at 100,000 users and growing leaps and bounds. And it's just behavioral change connecting to dopamine levels, just as an example. Thank you very much for
That's an excellent response, and definitely worth taking that. Tapelo, of all the ideas and suggestions you've heard so far, if you had to pick one thing that Asea should focus on for the next few years, what would it be?
Thank you so much, Abiana. If I were to pick one thing, I'm going to borrow this from what I've heard so far from this morning. I would say information sharing and availability of data. So I feel like that's an area that Asea can really ramp up in terms of providing service to exchanges in Africa, as well as stakeholders from the international market who might be looking for information about the continent. So I feel like that's an area that is really important in terms of assisting with decision making and also knowing the various dynamics about the market.
Thank you very much. And with that, we come to the end of our panel. Let me say a very, very big thank you to the panelists. The key points are clear: our macroeconomic environment engagement, more information and engagement with stakeholders, and AELP can transform liquidity in our market if we get the plumbing right, if we bring all stakeholders. And as Sunil said, if we all work towards this prosperity goal for all of us. Thank you very much for your attention.
Thank you so much. Let's appreciate the panelists with a round of applause. And just before you leave, we have a gift, so don't leave yet, don't leave yet. We want to gift you with something good, just to appreciate the value of giving us your sentiments. And as usual, I would like to request, I think the president is not here, so I'm going to request our Nigerian, or the vice is actually here. Please kindly come, so that at least you can pass this particular gift to our panelists. Thank you so much. You must agree this was a very good chosen panel for the afternoon. They were not rushing us, and that's why we didn't have questions. If you understand it, everybody was clear. It was a very good chosen panel. Thank you so much for the valuable input. Asante sana. So there you go. I think he chose to first of all deal with the appropriate way of representing gender, which is good. Which is good. Gentlemen, be patient. All is well. We have enough. There you go. Please, we're going to pose for a picture. The photographers are looking at you and ready. I think, oh yeah, there you go. Yeah, just pass it here, yes. Don't forget him. Don't forget him. Absolutely, absolutely. There you go. Let's appreciate it one more time with a round of applause. Asante sana. Beautiful. And thank you so much for that session. Asante sana. Ladies and gentlemen, we are just about to close. And just before we do this, allow me to kindly allow a brief session of asking you to kindly stand. Please stand. Please stand. We understand this is the afternoon. Please stand. I understand sometimes when the context is quite heavy, you can as well sometimes almost be carried away. Please stretch in your own way. Just stretch the way you stretch. I will not ask us to stretch the Ghanaian way or the Nigerian way. Just stretch your way. You can borrow from your neighbor however you do it. Oh, this is how they do it in Ghana. Right? That way, that kind of way. Okay, ladies and gentlemen, everybody just do it the Ghana way. There you go. Just stretch to your right and then to your left. Make sure you bend until you hear something mentioned, some sound called ku. Just that sound. That means you're good. Now you can take your seats. Thank you so much. Thank you so much. Ladies and gentlemen, wow, this was such a wonderful panel. They're not even done yet. They're not exhausted. Everybody's crowding around Donald, so I'd request that you pass those cards very fast. Thank you so much. Ladies and gentlemen, please allow me to very fast, and this is going to be amazing because listen to this. This is powering investments through technology. So it's a technological kind of panel, and we're going to almost get practical here. And I want to request that we have our moderator, Mr. Colin Tafumaneni, CEO, Ecro Group. A round of applause to him as he comes. But just before then, I've just been alerted on something very quickly by Lina. Sorry, I was about to give a title to someone else, but let me allow the moderator to kindly come. F.A. David Kanyi, Senior Manager Digital Finance Services at Safaricom PLC. Kanyi, please, if you could make it right here. There you go. Asante sana. Now you can appreciate him. This is the real one. There you go. And joining him is Mr. Narcel actor, president and CEO, Infotech Group. Please make to the stage. We also have Mr. Colin as well, CEO, Escrow Group, and Mr. Sriram, Senior Vice President, Sales, Chela Software, and Mr. Celestine Rabukumba, CEO, Rwanda Stock Exchange, joining in the panel as well. And finally, yes, we have Ms. Juliana Rotich, Head of FinTech Solutions at Safaricom PLC. A round of applause to the team, please, as they come. Makofi tafadhali. This is just a request you to clap more. We like doing it very well because the lunch was quite good. Moderator, over to you.
Thank you, and good evening, everyone. I know everyone has been tired. It's been a long day, but I believe this is the best panel for the day, given what we're going to cover. So I'm seated with tech gurus. And I think listening to the conversation from early morning, it's all been about how do we harness technology to, one, lower our costs, connect more people, bring more people closer to the markets. And to unpack that, I have a panel of experienced industry and global leaders who are well acquainted to these topics. So I'd like to invite my panelists for our afternoon panel. Welcome, all of you. So I'll start with Nasira. So tell us, what emerging technologies do you see having the greatest potential to transform the investment landscape in the next 5 to 10 years?
Good evening. Well, technology is the subject, and people have had their lunch, so you can imagine what can happen to this panel. Emerging technologies, very interesting thing. If you could tell me what is the most used buzzword these days in technology? Here you are. Everyone from a junior school student to the presidents of the countries, they are involved in that discussion, AI and all that. So that is technology buzzwords. But in reality, one has to be very mindful of the undercurrents of those technologies which are going to hit you if you don't understand what is coming up in the next cycle of technology. And if you don't address it right now or equip yourself or enable yourself as what's going to happen, I can tell you, AI is one thing. Of course, AI has been there for ages. It is just the word that people have adapted, whereas people have forgotten the opposite of it, which is natural stupidity. So, so as opposed to artificial intelligence. But yeah, these technologies are real and they are coming up fast. And it depends on how you actually capitalize, how you monetize on that. For example, a few years from now, the entire back-end plumbing would probably be built on metaverse, for example. As Donald rightly said, that the consumer need ease of transaction and economy in the transaction. That's it. And we have seen not in the ages, in the last few years that happening, that businesses are being gamified in such a simple way. Uber, Airbnb, Amazon, e-commerce, lending platforms now emerging locally. Those are global, but locally there are solutions. M-Pesa has evolved into a fantastic game changer at that time because they captured that moment, that technology at the right time and hit the consumer's dopamine requirement, so to say. So that is going to happen to every business. So emerging technologies is a jungle out there, I tell you. But my take is that build your business models, simplify them, and then translate that and use technology as an enabler. Don't really expect technology to solve your problems of thinking also. No, that's not going to happen. So the capital market fraternity needs to sit down and evolve and work on things starting from the local public mindset, how they are thinking, the younger generation, the older generation, and create some kind of intelligence, draw some kind of intelligence out of their financial habits, and then translate into and pass it through the regulatory kind of channels where the regulators could also understand those kind of mind change patterns and allow or create a play in their regulations in order to embrace the communities. So these are the kind of things, and of course, then the market participants have to collaborate. They need to, and I tell you, that's going to happen very soon, not very far, that there will be platform syndications, for example. NSE's order management system probably would be integrated into M-Pesa. And the digital banking app from every bank would probably have an icon for trading. So these are the platform syndications, and back-end plumbing is going pretty fast. All what we need to suggest to the market participants to actually worry about simulating the business model and ease of doing business for the investors.
Thank you, Nasir. And just double-clicking on AI, and I'd like to bring Juliana into the conversation. By the way, Juliana sits in the Bill and Melinda Gates Foundation as the AI representative for Africa. So it's good to be amongst Juliana's wisdom, because Juliana started talking about AI in 2016. And we're in 2023 when we're hearing the buzzwords AI and AI all over. So Juliana, how can artificial intelligence and machine learning be harnessed to improve investment decision-making and portfolio management?
Thank you very much, Kanye, and thank you for inviting me to be part of this auspicious occasion. I think the way you framed the question is really powerful, because in the last part of it talks about the intent, and the intent here is to improve decision-making and portfolio management. There's an author called Kentaro Toyama. I often refer to his quote that technology amplifies human intent. And so when we look at this and seeing that our intent is to use AI and machine learning to improve investment decision-making, and then also to help us with portfolio management, it helps us to really orient ourselves around the good use of AI for us, the way Nasir has sort of really contextualized. So that's number one. And specifically when it comes to improving decision-making, I think the first opportunity is to understand our customers and to understand our clients better. I don't know how many of you have either TikTok or have children who are on TikTok, or if you have used any sort of social media platform, there is what the algorithm shows you, right? And the thing is, behind that, there's a large language model that is continually learning about each and every person, and each and every interaction that is happening on that platform goes to train that model, so that when it spits out a recommendation for a video, or a recommendation for a friend request, or a recommendation for something else, it is based on that machine learning, right? So the question here is, actually the opportunity is for us in the private sector to look at how we are using customer data to train our models so that we can really provide helpful, useful information to enable them to make the next best action that is useful, that brings them constructive value, and actually helps them to grow. Our Chief of Business Development and Strategy, Mutiga, mentioned that Safaricom is about financial inclusion, it's about transforming people's lives. And we have the honor of using these technologies, including AI and machine learning, to orient it towards transformation and actual constructive value. The other part of your question around how to do portfolio management. This is where the large language models are very, very powerful. At Safaricom, and specifically in the financial services space where we work, we have created a partnership workspace. And this is where we work with our partners in a way that protects customer data. So we create a workspace where our partner can utilize this workspace to do whatever manipulations of the data that they need to do, be it credit scoring or any sort of analysis, and then being able to then present that information to our joint clients in a way that protects their data, whether it sits on our platform or our partner's platform, and or even as it goes through the APIs that connect the two platforms. So in terms of portfolio management, partnership workspaces that are powered by large language models that are also, that have powerful computing power and processing is an opportunity for us to be more efficient in how we deliver our services. And to take it a step up where we can even figure out ways to create new products. These are the frontiers in which we are very excited to be innovating around and really trying to figure out what are the insights that the customers are telling us and really turning that around to suggest and to create better products that serve their needs.
Fantastic. The elephant in the room that has always been, and no one wants to tackle it, is blockchain and crypto. Celestine, I want to bring you in the conversation and tell us, with the rise of blockchain and cryptocurrencies, what impact do you foresee on traditional investments, vehicles, and strategies?
Well, I thought this panel was for the experts in the area. You know, in our industry, we must be transparent and declare our interests. So I will start by saying that since we are here, I will attempt to answer you. The technology is there. The blockchain is good technology. We talk about cryptocurrencies, which is part of your question. The technology is good. No, there's no question about it. The currency, the cryptocurrency that is coming with that, to me, I think we have to look at it from, first of all, the point of view of the technology itself and how it's applied. So that technology comes with efficiency. It comes with transparency. It is traceable. The issue of cryptocurrencies, the way it affects the strategies of investments and so on, it will depend on how we are ready to adapt it. From the regulatory point of view, it will depend on how people embrace it and learn to live with it, because it's here to stay. So it's another asset class which can bring value if we do it the right way. I've had a lot of jargon today about investments and what to expect for the future. But for us, as regulators, we must adapt to it. As investors, strategies for investment, we learn how to adapt, of course, ourselves, our strategies. But not looking at, for example, the cryptocurrencies, the way we look at them, they are not an end in itself. It's a currency at the end of the day. But what we use it for and how we adapt to what it can do, but in the world of efficiency and how do I put it? And adaptability.
Fantastic. I know everyone has been avoiding the conversation around crypto, but key buzzword from what you're saying is adapt and find her usefulness and how it can be used within the ecosystem, and especially the blockchain technology. So I'd like to bring Shriram into the conversation. So in terms of data analytics and the advancements around big data, how does this influence investment strategies and risk management?
Thanks, David. Indeed, a pleasure to be part of this elite gathering today and the panelists and my fellow speakers. I'll just relate to some of the what was mentioned in the earlier panels, Mr. Donald, as well as what was done.
Keep it closer.
Yeah, the pre-lunch session. So what was mentioned was the panelist said that his organization generates huge amount of data. And Mr. Donald just mentioned about an app which has been extremely successful because it could understand the mood or the sentiment of the audience. So that's precisely what I'm going to talk about. Today is related to big data and analytics. Today it is going to be, just to give a perspective as to what is this industry all about, big data and analytics today is a $25 billion industry worldwide, and it's growing so fast. It's predicted that it will be at least an $80 billion industry by around 2030. So that means there's a lot of things going around big data and analytics. So how does it impact investment? Moment you talk about investment, you cannot have investment without a regulator, because that is never heard of. And if you have a regulator, if you have investments, you need to have risk management. If you want to have a regulator, risk management, then you have to have compliance. So I'll talk about all these things in a perspective. I think you need to give me extra time for that. Yeah. So just talk about, from a perspective of investment management, there is huge amount of potential as far as big data is concerned. Primarily, precisely the same example what Donald mentioned, if you are able to seamlessly go through tons and tons of data, it can be unstructured data, it can be structured data, semi-structured data. Today, whatever comes out of Twitter, or whatever comes out of the social media, there's huge amount of data, huge amount of learnings where you can learn from. Any organization or any financial institutions can benefit out of it. Just to give a simple example, we talk about data being the new oil. Today data is the new oil in the digital space, primarily because oil was the driving force of the industrial revolution. Today, for the digital revolution, you need data. So the problem with data and oil is that data as such, or oil as such, is not very much useful. You need to do the refining of the data. Same is with the data as well. So you need to do the refining of data. That's what all big data analytics is all about. You need to refine data, tons and tons of data, and then extract meaningful insights out of this and make it useful. And how do you make it useful for the entire community? So that's where the whole thing all about. If you talk about investments, industry per se, take a simple example. If I have data insights on the demographics, on the market segmentation, on various asset classes, what is successful, not successful, I think we can have all sorts of conducive environment for launching new products which can be accepted very well by the markets. That is one area. I can also do my marketing communications very well if I have meaningful data with me as to when do I release this communication, what should be the pattern, whom should it be addressed to. So that is one part of it as far as marketing is concerned. In terms of risk management, if you look at data analytics, you have various types of data analytics in terms of, you have what is known as predictive analytics, where you can predict, for example, in the case of investments, if you can predict losses with a reasonable amount of accuracy, I mean, that itself is a very big advantage for us in terms of investments. So predictive analytics is going to play a very important role as far as investment management is concerned. So that also deals with the risk management, because with risk management, you are talking about losses, you are talking about estimating the losses and things like that. So big data analytics goes in a big way because it uses statistics and a lot of modeling techniques to ensure that, how do you do proper risk management. It also has got a lot of talking about exchange space, because everybody here represents various exchanges and clearing corporations. Exchanges and clearing corporations, by virtue of the business, they have tons and tons of data. And it is up to the exchanges to ensure that you utilize this data to come up with meaningful this thing. You have various problems. Which exchange and which clearing corporation does not have problem? Everybody has got problems. Problems of liquidity, problems of very, very many other things. So it is important that we analyze this data. A simple example is in terms of what has been happening is you analyze historical data, but by the time you analyze this historical data, it's too late to react. So what happens in big data analytics is you have real-time data or near real-time data where you can analyze and ensure that you come up with a lot of insightful things which can be useful for the markets. So especially in the area of surveillance for exchanges, it's extremely critical. And to ensure that you have there's no systemic failure in the markets. So big data analytics is plays a very big role in this area as well. So surveillance is one area where you can embed big data analytics solutions into this thing. Then so that encompasses the entire area. In fact, you can talk lots about wherever this can be applicable. But I think these are some of the flavors as to where it can be applied.
Fantastic, fantastic. And I think one of the areas where, as Safaricom, we've seen opportunities where we have managed to get data of the largely unbanked population. There's data on the banked population is easy to get through formal structures, but the unbanked population where we have used our expertise to harness that data has really helped us in working on predictive analysis, recommender engines on how some of the clients, and also looking at behaviors, just understanding the behaviors of our customers and proposing certain solutions. So it's very, very important that what you're saying in terms of just ensuring that you have the data, you have the tools to harness that data and use it for more productive use. I want to bring Colin into the conversation. So we talked about technology and, of course, the importance of technology. Nasir has mentioned, it's how you use the technology, but not over-relying on it. So in terms of what are the risks and opportunities associated with the increasing reliance on technology in investment processes, and how can investors effectively navigate this evolving space?
Thank you very much, David. And it's a very good question. And it speaks to, I will answer it in the context of the capital markets and the purpose for which capital markets exist. I think in very simple terms, capital markets exist to connect capital to enterprise. So when we speak about the technology coming in, let's look at the context. Let's look at the continental context. 44 million SMEs, for example, according to data. 1.3 billion population. We are looking at $3 trillion economy consolidated in Africa, and we are looking at 94 value chains in terms of economic activity. So the question is, to what extent are capital markets actually impacting on those figures? To what extent are we looking at how many companies are being able to raise capital on our capital markets against the actual economic activity that is taking place in Africa? So one of the reasons why there is that exclusion is because of risk. I think stock exchanges exist to de-risk, to manage risk. Now, technology then comes in to address that and unlock the potential and the opportunity. Because I started talking about SMEs, because there's been drought of listings across Africa, across exchanges. But we have 44 million. Maybe let's discount 40 million. Let's just talk about 4 million. Split that across all the African countries and say that's where our listings should come from. Surely, we should be able to see phenomenal growth. But to be able to do that, you definitely need technology. The technology then gives you the opportunities to bring in financial inclusion, not as a social responsibility, but as a valid economic activity that has an impact on economies. So that financial inclusion then leads to, then requires efficiencies, because what is happening in our economies is that those who are financially excluded have no time to go through all the loops and hoops that stock exchanges provide. So why don't we adopt technologies as stock exchanges so that we are able to respond to their needs where they need an answer today, and you use technology, big data, algorithms, AI, to actually determine the behavior of these SMEs, their capability and their potential in a transparent, secure, and technology-driven way. Then you just harvest that, and then we become even more relevant as the capital markets. So that would lead to expansion of our markets. That would increase the product scope, just relying or capitalizing on technology. Obviously, it comes with risks. Cyber security risk has to be dealt with. The issue of now introducing algorithm trading, which might actually bring in artificial volatility that does not represent the actual, what is happening on the ground. But there are many ways to mitigate that. This is why capital markets exist. We exist to bring down the risk. So therefore, we invest in cyber security, protection measures. We invest in balancing technology between technology and human judgment, rely on professional judgment, but with a target to say, why can't we harvest 3-4 million of the 44 million SMEs into the capital markets? But how are they going to be funded? This is where I also brought in the issue of the 1.3 billion population, where we know that Africa has the youngest population. They are going to retire. They need social security. They are not formally employed. Now, bring in technology to actually convert that population into savers. And once they come in as savers, even saving $1 a day, and you consolidate that, you now have a capital base that is resilient. You are no longer, relying on one or two big investors who, when they call each other in terms of their sentiments, your market is gone. You are actually spreading the base of your capital markets, because it is speaking to your local value chains, it is speaking to your local savers, it is speaking to your local enterprise, and it will be more resilient. This is the biggest opportunity that technology presents to capital markets. Thank you.
Fantastic conversations there. I think just listening to you and just looking at what technology can do in terms of bringing together the supply side, the demand side, to come and handshake and utilize the opportunities that are there, and also, of course, leverage on the availability of tech that can bring them together. It's very, very powerful. So I want to bring us back to the conversation. Again, on implications of quantum computing, the cutting-edge technologies of the future, and in terms of financial modeling, algorithmic trading, and investment research. What is the space for this? Because I believe where we are headed post-COVID is that the man in the middle has been removed, right? And it's now end-to-end technologies servicing customers, servicing the needs of various, some of the consumers that we have. What is the space for these technologies?
David, you have picked up a subject which is more academic than a commercial use case. Quantum computing can be discussed for hours and days, and thankfully I have done some work back in 30 years ago in Silicon Valley. Quantum computing is essentially now quite useful only in very research-oriented, large, complex issues to be addressed through quantum computing. For example, the climate change patterns, space explorations, these kind of things. Whereas the conventional computing is powerful enough to solve the commercial use cases around the world, including processing $109 trillion of annual capital market transactions. On the other hand, what is happening actually, quantum computing is consolidating into few institutions or companies who do these kind of complex problem solving. On the contrary, the conventional computing is actually becoming more powerful on the edge. Imagine a cell phone today, what kind of memory, what kind of processing power it gives you as opposed to the mainframe 30 years ago. So because AI is now becoming quite prevalent and thin in processing, and by virtue of its underlining coding techniques. So that's why it is now available on the edge computing also. So there is hardly any business case to discuss even the quantum computing here. But conventional computing is just there. It is all about how effectively, how geniusly, and how intelligently you put it into use to solve the problems which are on ground around us, and which are relevant to certain markets and use cases in financial sector, for example. Yeah.
So in the same breath, in terms of financial modeling and algo trading, what is the space for algo trading for our markets? Because I think one of the challenges that we've had in terms of embracing algo trading has been the interruption and disruption that it can bring to our markets in terms of price discovery and non-artificial ways of researching and giving the right pricing for the assets that are listed.
David, it's the same thing which I will repeat, that AI has been there for some time. I mean, in a different name or shape. Algo trading was what? The same thing. I mean, in algo trading, I mean, you used to have certain formulas and algos where you do the input manually by the traders, which is now picked up by the automated scripts of AI. So the words have changed, and probably the pace has changed a lot, which renamed this thing into an AI thing. So it's machine learning. I mean, learning from the patterns and applying it on the next predictable scenarios that you. So I mean, those are the words of past. Algo trading and high frequency trading and all that. Today it's the power of the computing power and the power of the language and data and the machine learning techniques that you apply on any business case.
Fantastic. Yeah. I want to bring Celestine into the conversation. In what ways can technology be leveraged to democratize access to investment opportunities? And looking at more of regional integrations, intra-Africa trade, and where is the opportunity for stock exchanges?
Well, yes, I think the opportunity, one way of looking at that, the exchange, what they can do to achieve this is through online investment opportunities that they can provide. The platforms and adapt to online and mobile applications within their own platforms. They have to make sure that they work with different telcos, like we saw like the Safaricom today, to allow different players of today to be able to leverage on investment opportunities available with them. But in democratizing, you have to make that accessible to everyone. The investors of today is not the investor of yesterday. Like was said earlier here, today, you have those big investors who are already there, that is institutional, but most investors out there, or would-be investors, the 70% of the population is not investing. So by adopting the new technologies in those platforms, you avail them to the general public, especially by attracting their attention in what they like. You know, fractional trading, you can introduce that. The exchanges can do that, and are linked to each other. So projects like the ELP, for example, we have the CMI in East Africa. We have, I think, another one in Southern Africa that is trying to link all the exchanges together and leveraging on the knowledge we already have in the platforms and technologies can be of a very big help in that area. So additionally, by creating digital platforms, you know, for people for companies that, you know, the things like crowdfunding, we make sure that you adapt that to make sure that, you know, the crowdfunding and those platforms don't have boundaries. So you introduce things that will make sure that people are able to access anywhere they are. So that means that they also have to work with different regulators to allow this to happen by, you know, creating enabling legal frameworks to allow investors across all our markets without having any boundaries, because the technology is there. But all we need is to make sure that we work together on to make sure that it happens.
Including harmonization of regulation.
Regulations must be in sync. We heard earlier about the plumbing. So the investors, you have to know what they want. They just want something simple. And the kids we see today, which are making 70% of our population, they are not, you know, embracing our markets. So we have to be innovative enough to cater for both sides of the coin, which is the small and medium enterprise, which are comprising of our the bulk of our economies, and then the people who would be using those tools that are made available for them.
Fantastic, fantastic. Juliana, I'd like to bring you into the conversation around impact investors. How can sustainable and impact investing be enhanced through integration of technology and data-driven approaches?
Great, thank you so much for that question. It's something that I'm very passionate about because my background is actually around impact investing and also entrepreneurship. So the first key way, and I think I'd like to piggyback on Colin's point about the opportunity to help SMEs, and in our world, we go beyond that. We go SMEs and then we go micro SMEs, even as we serve the whole gamut of entrepreneurship. And the first is to give them the tools that they need to do ESG reporting. And to be able to put that information in the pipeline of in the information that is then shown as part of the markets that they participate in, right? So the pipeline of companies, the 10 that the president mentioned, and others that are joining the Nairobi Securities Exchange through the Ibuka program, working with them to start getting them to think about what are their ESG models, how do they report that simply and easily, so that when somebody is looking at their information in the market, they can also get a sense of what that company's values are. And if there's that alignment, then somebody can put that capital towards that by buying that particular security. So I think that is one way of doing that. And then the other way of looking at it is also that the ESG reporting and impact investors are really about the positive value to society. So yes, it is possible to be sustainable, to do well, and to do good. That you can still make money, yet not destroy the communities and the environment in which you operate in. And I think it's important for us to really look at it as an opportunity to include this information as part of the markets that we operate in. And then
One of the things that we care about is this idea of just-in-time nudges to help clients to meet their savings and investment goals through the products that we create. In the same vein, we can provide just-in-time nudges and information to participants in the market about the ESG activities of the securities that they're purchasing as part of the information and as part of the learning that people have to do to really understand what exactly is this company about, what are they specifically doing. Let's add that information as part of the ticker or part of the information that they learn. And then the last part of it is, to your point about the opportunity around working with the unbanked, there's a big opportunity for us to turn everybody in this room into an impact investor. So the demo that you saw earlier with my colleagues, David and Mweni, we want to be able to democratize access to market participation. And all of you in this room, all of you who are in this particular country and the countries that you represent can be participants in the markets and can be impact investors if we provide the information and the access to the markets that makes them impact investors. So I'll stop with that because I think there's just a lot of opportunity for us to use technology to do this, and it's our job to make it easy peasy, like the way we started. And then I think the last part is also just to harken back to the President's remarks earlier. He did mention ESG and the opportunities around climate finance. So also taking that opportunity to connect impact investors who would like to put money behind companies that are doing something about climate change. Yeah, I think those are the
Fantastic.
opportunities.
Just picking up on the education bit, Shriram, on the role of robo-advisors and a robo-advisory for, in providing financial education and literacy to empower, investors also take opportunities within the exchanges.
So robo-advisors, as you all know, I mean, that's a phenomenon which has been picking up. Today, it's almost robo-advisors handle close to around $2 trillion of assets under management across the world. It's growing extremely fast. Looking at, I'll just briefly mention about, how they function basically, broadly, and then we'll get into this financial education. Primarily, they follow the model of portfolio optimization. So that means they look at the risk profile of the individual and then try to fit it into a portfolio optimization model. And then whenever the market vagaries happens, markets go up and down, then they try to rebalance the portfolio and then try to bring it in the same curve. So that's what, in effect, what a robo-advisor does. And you have, in many cases, when you have investors who have, high net worth investors, you have a mix of both robo as well as, manual advisory, what is known as an hybrid system. So, so it has been extremely very effective. And for the simple reason that the majority of the market participants, they are very happy if I am able to get a reasonable amount of return. I don't want a very high alpha and things like that. I'm okay if I provide my risk profile, this is what I want, and my robo-advisor is able to give me. So for entry-level professionals, this is a very good thing. I mean, for example, for a youngster who is trying to build up a portfolio, this is quite a good thing. I have given my risk profile and I want to build up my portfolio with a robo-advisor. It does the act very well, okay? So the power of robo-advisors is very impacting across the community, and it has a lot of potential in education because the way it has impacted people, when we talk about assets under management, that means it has impacted a large number of people who are otherwise would have stayed away from the market, stock markets and all, whereas they've been brought into the system. So that means they play a very important role in financial education. And going forward, you can find more and more advanced AI-enabled robo-advisors. I mean, that I think will be an ultimate phenomenon because they're going to replace manual advisors. And typically what happens in manual advisory is that the cost. The cost is very high. If you're able to AI-enable robo-advisory, that is going to present a phenomenal benefit to the investors. And that way at a very, very low cost, at the nth of the cost of a traditional advisor. So that is going to be a big game changer as well as for financial education.
Fantastic, and I'm sure this is music to Donald's ears. So, we can't talk about technology without talking about security. and I'd like to bring Colin into this conversation. You know, cybersecurity challenges and considerations that investors need to address, even as they embrace digital transformation. We've seen DDoS, attacks, and these are exposures to our businesses, the exposures to the investors in terms of fraud, in terms of just getting the attacks. What should businesses look at? How should they prepare for these kind of eventualities?
Thank you. Fortunately, this subject has become quite topical. If we look at the trends, so we are not speaking about something that is alien, that is frightening, that has not been heard of, with even governments coming up with laws that speak to data privacy and protection. I think it's a subject that everybody is seized with. So you'll be worried about, cyber threats. We all know about the cyber threats. I will not dwell on that. You'll be worried about phishing. You'll be worried about such things. So a lot of these things are already topical anyway. And looking at, you are my moderator today, but looking at you with the Safaricom colors, you have been leading the way in terms of running those, millions of transactions and ensuring that we are all protected and capital markets can always, take a leaf from you. But the aspects that are not really mainly talked about are more human. So you are looking at the insider threat when it comes to embracing these technologies. So basically, you are going to, if you rush into this, you're going to have that one guy who can control things. And if you don't have lots of controls in place, then whatever you're trying to achieve is undone by that one guy. I was joking with someone saying, we in Africa, we have difficulties with elections and all that, but we have mobile network operators with a short code. Why can't there be an application on voting day, the way you actually dial a code and you choose the president of your choice? So someone said it won't happen because the guy who is behind that technology is the one who installed the president. So those are the threats. Now, if you're looking at it now at business level, they are real threats and they need to be taken care of. Then, obviously, apart from the insider threat, you're also looking at, so it would appear I'm saying, then you must outsource and get an outsider. That's a threat as well. So you are actually leaving your fate in the hands of an outsider who is definitely in charge. So what you need to do is to strike a balance. But most importantly, it's about the skills. Ensure that you upskill and make sure that you are at the top of the game. But very lastly, investment. I think there has to be sufficient investment into protection of the threats that we are talking about, because if you don't invest, if you focus on just the business aspects, then you undo all the efforts in terms of innovation, technology, because you'll be attacked.
Be ready, upskill, invest, and be wary of the backstabber who can be. As you look at the gate, there's someone behind you. So I'd like to invite the participants for Q&A, and I can see very many hands shooting up. Must have been, so yeah.
All right, I think the hands are just concentrated here. I'm going to come to the back.
Thank you for this very interesting panel. I have a question on AI. Do you think that with the growth that we are seeing in AI, and which will undoubtedly continue, there is a big threat on machines controlling humans? And in fact, the reason why I'm asking this question is because I watched a very interesting documentary on YouTube by the previous chief operating officer of Google, a guy called Mo Gadmat, who was driving the AI drive for Google, and then he decided to leave. And he's come up and said that he sees a lot of potential in AI, but if left unregulated, as the case is here, right now, at the global level, there will be major threats. And to simplify his reasoning, he came up with a very interesting discussion. He said that when Einstein came up with his theory about relativity, he had an IQ of about 165. And he says that if Einstein decided in those days to engage into a conversation with a normal human being with an IQ, well, of 110 or whatever, he would found it very difficult to convey his ideas and thoughts for that guy to understand what he's talking about. And he says that at today's level, AI, like ChatGPT and so on, has an IQ, in his views, around Einstein IQ. But he believes that with quantum computing, by 2037, he believes that AI will have an IQ 1 billion times of Einstein. And this is what brings him to the point that it will be impossible, if left unchecked, for human beings to converse with a machine. So I want to have your views on that. Thank you.
Asea, you want to go first?
Yeah, I can try, although the subject, the same thing is being discussed at different level with a different perspective and for a different outcome. Like, for example, politicians are looking at the opportunity and threat in a very different frame, as opposed to the CEOs of the tech companies are probably thinking that how to counter the offensive of other AI techniques. The regulators and everyone is thinking through their own lens and mapping it on their own problems. But reality is that the way it is proliferating and the way getting it go unchecked is probably a wrong thing, because how can you stop it? Only an AI can stop an AI at the speed it's actually proliferating. So there is going to be an interesting debate and very interesting and different outcomes in different scenarios. In governance, it's going to be very different set of outcomes and discussions behind that. And in businesses will be different, and in the technology world, it will be altogether different. But it's a subject which is very exciting, but worrisome at the same time, at the same magnitude. So there is no clear answer to your question. If you want to me to be, yeah.
Let's hope Juliana has a clear answer.
All right.
I think it's not probably not an answer, but one of the things is we need to increase our capacity to understand these technologies so that we can understand the uses, because sometimes it's about the context of the use of that particular piece of technology. All of the pieces of technology that have come before us, it's a double-edged sword. With all of these things, there's a way that you can use these things in a way that that detracts value from society, and there's a way that you can use these things to bring value to society. So if we look at it with that lens and look at the leaps and bounds around AI and what it enables us to do. So the other way of also looking at it is we're now able to do faster drug discovery, right? Because you can put in all of the model and the information, and some of the permutations that would have taken months to figure out can be done quicker, right? So I think it's, yeah, like I said, one, let's increase our capacity, and by our, I mean not only the people in this room, but also our leaders and the regulators to be able to understand the impact of these things and the context of use. I think that's the kicker here, because it should be illegal for you to use AI to do deep fakes. That should be illegal, right? We can agree that that is unacceptable. It should be illegal for you to use AI to nudge people to do things that they shouldn't or do not want to do, you know, like ways that to power illegal trade. We can agree that is not good use of technology. So I think that's how I would contextualize it. And even with these advances, even if the piece of AI gets so intelligent, in what parts of our lives do we allow this piece of technology to have a say? And I will end with there was an article in MIT Tech Review for September, and it looks at the way AI is now being used in war. And the recommendation, I'll skip over the bulk of the article, was this idea that we need to use AI as complementary to human decision making. At the end of the day, there needs to be somebody who's accountable and responsible for the decision that is made. So then we need to be careful how we apply these pieces of technology in our society and guide it with our human intent, or else then it can run amok.
So in just 30 seconds, Colin, you have a comment on that?
Very quick one. 30 years ago, when internet was coming, these debates took place, and everybody was really worried about what internet meant. We have adapted. We will adapt. Thank you.
Fantastic.
Thank you. I hope the MC will allow me to do a two-question part, and I'm looking at him to know where I should pay him for that. The first one is to Shriram, and we have talked before about the youngest broker, or almost the youngest broker in India, also being the largest broker, and growing during the COVID period. So I was hoping you could give us your thoughts and views on that, because I think that is a good case. And my second question is to Juliana, if she would be so kind, and I'll try to make it an abstract question for intellectual property purposes. So communicating financial information so that I'm able to make a decision presupposes to a certain extent their level of knowledge. Otherwise, there's a lot of work that has to be done to make it understandable. And perhaps very carefully, I would imagine, if you could give us how you'd go about thinking about that problem statement. Thank you very much.
Yeah, thanks, Donald, and thanks especially for remembering our conversation on this particular broker. Just to give a perspective for everyone in this room, just to give the India stats, basically today we are talking about. Sunil also briefly mentioned about in the India stats. Today we are one of the largest in the world. In fact, we are the largest in the world in terms of derivatives trading volume. We do the largest number of trades, that is NSE. And in terms of market capitalization, we have got close to around 4 trillion. And India is the largest market in the world for IPOs today. Close to around 200 IPOs have already been issued as far as 2023 is concerned, and raised to close to around $8 to $10 billion. So this is some of the important facts. If you look at the mutual fund industry, I mean, there's a phenomenal amount of investments which is, in fact, getting into. In fact, people are standing in the queue to put in funds into the mutual fund industry. That's a huge, very, very comfortable, very elated feeling you have when a lot of funds are getting poured into industry from IPOs, from secondary market, and so on and so forth. Now, coming back to Donald's question on this broker, the name of the broker is Zerodha. In fact, he's a techie. He's not even a broker by profession, by second generation or third generation, because India traditionally you have a lot of family-run brokers and all. I mean, they have been in existence right from 1885 onwards, when origins of Bombay Stock Exchange and all. But he was a techie. I mean, he has been all along been a techie, and he created a technological company, which became the largest broking company in India today. They have close to around 15 to 20% of the market volumes. I mean, when I talk about volumes, we are talking about $400 billion of trading volume per day in derivatives, and close to around $8 to $10 billion in the cash market. So that's a huge volume. And this is the broker which is cornering the maximum volumes. In fact, the new age investors, the old age investors who are into heavily trading volumes, everybody is jumping onto this broker. For the simple reason, what he did was, first is he did a lot of investor education. Even if you go to his site and look at this thing, he will, even for anybody who is new to derivatives, in fact, if you look at derivatives as a concept, for a newcomer, it is quite daunting. It looks like a mountain. What am I talking about? What is options? What is Greeks and option Greeks and all? If you start going through textbooks, it's quite daunting, and I don't want to do derivatives, But the way he has presented the topics, anybody can go into the website and see. It made it so lucid that you will feel like entering into an options trade. You will feel like entering into a futures trade. Made it so simple. So that is one. Investor education is one. Second is, he understood the pulse of the market, what the people want. My colleague Kuldeep also mentioned about it. One of the most important points as far as broking is concerned is your cost, the transaction cost. So what he did was, in one shot, he made it a flat fee. Whether I do $1 million or $100 million trade, I've got a very, very low fee. You do small, you do big, you do whatever you want. You have to pay very, very normal 20 rupees or 30. What is that, Kuldeep? So it's a very, very small amount. So that became a very big hit. Overnight, everybody switched on to this broker. Today is the largest broker thing. And of course, because he's a techie, if you want to be successful in this in the securities market, you cannot do without risk management. So your risk management has to be absolutely foolproof. So we had the best house systems in terms of risk management. So we have not had any incidents in terms of any disruptions, of course, very minor things. And so he manages risk management very well. He ensured that he could attract the customers very well because of this pricing and investor education and a lot of interactions with investor community. For example, I am taking a portfolio, I'm doing a derivative trade, I'm doing the strategy on a derivative, I'm doing a straddle, strangle, whatever it is. I can discuss with some of his key experts and say, this is a strategy I'm going to employ today, is it good or bad? Then I'll get expert opinion, in fact, very good opinion. So these are some of the factors which made him very successful today. So it's a very showpiece. It's an extremely good showpiece in terms of how you can price the market and how can you be successful in this market actually. Yeah.
Fantastic. Juliana?
So it's funny that you said that this, you made a caveat around IP. So, but what I'm going to share is kind of information that is publicly available-ish, because this is it's an approach that my colleague David Kani, this is how we approach financial services information. We work with Asifa, which is a financial institution of certified financial advisors, to be able to then connect them to, we're still working on it, but the first part about providing any type of financial services information is to work with organizations like ISIFA. David is a board member, and I'll ask him to please just chime in a little bit around that approach. And then when it comes to the nerdier part of how to make it happen, we also look at ways to make sure that we are citing or providing resources that are also coming from a point of sort of sanctioned or like allowable resources that we would not feel bad about saying, okay, there's this financial information, that there's an institution and some thought behind it. And I think even as we look at the possibilities of providing these tools, there's always the human touch that I don't think is going to go away with any leaps and bounds. There's still going to be the need for you to have us sit down with somebody who can teach you and help you understand. Even if it's a video, or we still need that, that human processing. There's a level of intelligence there that I don't think any AI model is going to understand the nitty-gritty of the market dynamics in a particular country versus a different country. All of these, there's some intangibles that cannot quite fit in a pop-up. David?
So thank you, Juliana. I think looking at giving the right information, because I said the people we serve, the young generation, they are more on influence. So they get influenced about decision making a lot. So if you go to TikTok and those other social media sites, you find very many people giving all sorts of advice. Now, for us, our approach has been that advice should come from someone who is credible, regulated, and professional, right? And to do that, the only way you can do that is partnering with an institution that can give you that cohort of people. And that is why we want to partner, and we're partnering with ISIFA, so that the market intermediaries who are all members of ISIFA are able to come forth and provide that information, advise these young people, advise anyone who would want to get any information about capital markets, and that gives credibility to our market and brings back trust. Because the problem is you get an influencer who has no knowledge about the capital markets, just academic, and then misadvises the market, and then everyone runs away. And then we wonder why is that the people are not participating. But it's because they were given the wrong advice, and that they will always remember. There's something about our markets, about remembering bad experiences, as opposed to when you made money during Kenyan and all that.
All right. Thank you so much, David. I think all the answers that have been given have addressed the rest of the questions. As you can see, the hands are fine. Let's appreciate the panelists with a round of applause. But David, I want to give you the final word. Did you want to say something final, just in case? Just to remind you, David is from the chief sponsors of the conference. I have to be careful. Yes. Oh, there was. Oh, so there was one. There was one here. Yes. At least for gender purposes as well.
Thank
Gender
you very
equality.
much. Thank you for having me. So with all this robo-advisor learnings from big data, for an investor, from an investor's point of view, does that mean if the robo-advisor gives a recommendation, that investor is never going to lose money? What do we do with the actual experience of an investor who says, I took advice from a machine that has superior data and I lost money? What does that mean, really? Is it that because of all the superior, we've analyzed the market, it's a sure win for investors?
I know there's something that Juliana mentioned, but I would like Donald, who's running a robo-advisor in town, to respond to that.
I'm not sure if I should. Who am I going to sue when it fails? And so that's why we don't turn it on and just let it run. We always have an investment counsel, assets, who would be sued, who is an ISIFA member. Thank you.
Fantastic. Allow me to thank my panelists. I know I'm out of time. Juliana, Celestine, Shiram, Nasir, Colin, thank you so much for the insightful conversation. I think it's been captivating. Do you all agree?
Yes.
And thank you all. Thank you. Asante.
Thank you so much. Let's appreciate the panelists one more time as they take the... But don't leave yet. We have some gift hampers for you. I don't know how we're going to give David Kanye a gift hamper that is written Safaricom, and he's from there. But no worries. I think he might donate that. But thank you so much. I want to request Oscar to kindly come and help us in giving this particular gift. Wow. Ladies and gentlemen, if you are mesmerized by what had just happened, you can now talk to your neighbor on what just happened. You know, it was quite a scary conversation about AI, and where we're looking at, I didn't get a substantive answer. Everybody's scared. But no worries, we have been told to adapt, just like we were scared 30 years ago. I don't know where you were 30 years ago, but we were scared then. Terian, I don't know where you were, but I remember we were one of the guys in the board that were quite scared back in 1960. Jeff. Just checking. Let's all pose for a picture for the photographers. If you could kindly come closer this way. There you go. Just turn the bags so that they can read Safaricom. This is because they're the people who give us the biggest check, so it's important that we report this back as financial people. There you go. Thank you so much. Ladies and gentlemen, thank you so much for that session. Beautiful session that we have had there, and thank you so much, moderator.
All right, ladies and gentlemen, with that we come to a close of today's fantastic day one of the 2023 Asea conference. We'd like to thank all the panelists. Let's give all our panelists a warm round of applause. We want to thank each and every one of you as well for being here today. So if you, do we do the church thing of high five your neighbor?
Yeah, we can do that. Yeah.
So turn to your neighbor, give them a high five, say great job today.
Good one.
So a high five.
We can teach Donald how to do a high five, or that kind of thing. It's high like this, right?
All right, so we call it a day for now. We've got some tea outside, so feel free to network a little bit. Tomorrow we kick off